We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
Welcome back to Capital Mindset Live, everyone. Hope you guys are having a great one. As always, here I have Bacon and Jesse from Stone Cold Investors. Now, the topics that we're going to be discussing today are listed in the title, roughly speaking, and you'll find them in the description below, as well as the link to the club if you're so interested. So, by the way, those topics, we're not restricted to those topics. We are going to go with kind of the flow, but those are the general topics that we're going to be discussing and covering here today's live stream. So first things first, I think we have the earnings that have already passed, the big ticket ones. There's quite a few, some that we'll talk about that are not in the description nor the title, but the ones that most people pay attention to, they're in the title and the description. So I think the first one and the more interesting to the party in question that I have here is Alphabet. So starting big, starting strong, what are your overall thoughts on Alphabet's earnings? I guess we'll go Jesse, then Bacon.
Yeah, I mean, I thought they were pretty good. So I think there's like a little bit of like obscurity around costs and CapEx. And I mean, I think management could have been a little bit more direct in some of their answers of their spending and their CapEx. But like in the big picture, I mean, there wasn't anything like super glaring to me. You know, on a gross margin basis, they're kind of keeping that in check. They're going to be growing, obviously, like their hyperscale environment drastically. So they're going to be needing a lot of CapEx as they expand out for, YouTube, Google Cloud, everything that they support. It wasn't like I don't know. It wasn't great, but I didn't think it was bad either. So the market's reaction, I think, was, to me, it kind of felt more around the lack of clarity from management regarding certain things. But overall, I didn't think that Alphabet's report was too bad. But what is it, down 7% today, right? So yeah, it's starting to like pique my interest a little bit again.
Bacon.
The earnings themselves, tolerable, acceptable is what it is.
Well,
I mean, it's a massive company. I hold it like full and fair disclosure. I am majority indexed, so yes, I hold a passive position. That being said, though, I do want to get this one off my chest because, I've been from a distance with you at the same time as far as like listening to earnings calls, at least some earnings calls over the week. And this one was one where I really wanted to try to like give management the benefit of the doubt when it comes to communications. And good God, quote, as you may know, Fabio, you want to ask about CapEx. If there was one time CapEx expense, no. That's the only time I'll be straightforward, and then proceed with word salad, not give a range, not give any sort of indication other than word salad, and it'll be greater.
We're going to spend as much as we need, basically, is what they told us. Yep.
Yeah.
Hey,
does this narrative sound similar to another company from maybe 18 months ago? Right. So we know that the market like hates this type of like behavior from management with regards to like CapEx spend. Not necessarily that they're doing anything wrong. It's just that we don't have the insights into what they're doing. Some of the things that I thought was really like positive about their earnings is, geez, the YouTube ad growth, the YouTube premium sub growth, and the cloud growth is still just freaking kicking along. That looks really good to me. So it's kind of presenting potentially an interesting opportunity where like how much does a market have to punish this company before management gets it and is like, oh, hey, we should actually provide clarity on stuff.
I'm laughing at the name.
Me too. I left
Yeah,
it
yeah.
in as a
He's under a
Google.
time crunch. He's under the gun. So
Yes.
we'll all shut up.
Andrew, you're on a time crunch. You
go.
have to go deal with auditors. So take it away.
Go.
Okay, so Google earnings. I think that first of all, if you're like, I just want to say one thing. I don't know why some people are like really aggressively talking about buying the dip right now, like on FinTwit and stuff. Because if you weren't buying this 3 months ago, like what makes you so excited? Like when it was a lot cheaper. I don't know why you're so excited now. Like that's one thing. First of all, just like put this in perspective, right? I don't know what that face means, but that's just one thing. It's like, I mean, what was the price of this 6 months ago as an example? Because you can pull that up real quick.
Google.
128.
Yeah. So like, why weren't you buying aggressively then? Or like, I just don't get
Or
what I'm not
122.
right. So like, you just want to put that in perspective. People are like, oh wow, like Google sold off. This is silly. It's like, I don't know, maybe it's not even that big of a sell off. When you zoom out for a second. My opinion on this, and I talked about this briefly in the community of the club. Google, I think, is at an inflection point right now on the, and I mentioned this, but I think it's on the opposite side that Amazon's on right now. So right now, there's a question of the moat that Google has. Whether or not you believe in that, there is a question with AI on how that'll impact search revenue for Google. And so two things that like I think scared the market. One is ad revenue missed. And like even though GCP knocked it out of the park, which I thought was incredibly well done, operating margins on GCP tripled quarter over quarter, while they also grew. And YouTube just continues to be a beast. I think people are finally realizing now that they've changed how they categorize things, just how much is coming in from YouTube. But ads missed. And so people like goes back to the question of this existential question of, is there something that's going to kill Google search in the long run? So the other thing though is if you, I drew like an analogy or a corollary to Amazon in 2020. Google's at this point though where they need to ensure their moat, and they're going to put whatever capex they need to ensure that moat. And similarly, that's what Amazon was doing in 2020 and 2021, right? So Amazon was building up fulfillment, distribution networks, things like that. And at the time, everyone hated it. Well, if you look now, it seems to have been playing out because UPS earnings are trash. They're struggling. I think in no small part because Amazon's taking a lot of fulfillment away from them. And so it worked. The thing is, when you're going through that CapEx cycle, there's no guarantee it will work. And the thing is, at least with Amazon's moat, it was a physical, I mean, there's some stuff with AWS for sure, but there was a physical build out. Google right now, and the thing that's scary is like, look at the free cash flow comparison. So if you look like year over year, the net income's up like 5 or 6 billion, but the free cash flow is down like 6 billion or something. I don't know if you can find. I'd have to pull the exact number.
Table of contents not working for whatever reason.
Short Google.
These hyperlinks not working.
You heard it first, folks.
So page 47.
Yep.
But while you're saying that, so basically what's happening is what Google said is we are willing to invest in CapEx whatever we need to ensure our moat within search. And when people asked, well, how much is that? They said, we don't know. It's just going to be a lot more than it was before.
As you may know, Andrew.
Yeah, yes, as you may know. I mean, we can talk about how much management didn't, give. Google's management has never been good on the calls. Like, and it's really funny because they got followed up by the management team that I think is like the best on the calls in the business, which is Microsoft. And you just saw like the difference between the two there. But back to this. So they're going to be investing a bunch more in CapEx. They didn't give any guidance except notably higher was the quote. And it was 11 billion in Q4 2023. If it's going to be what's the runway rate? CapEx, is it 60 billion? Is it and so that's kind of why the self. Now, circling back, this stock isn't like, at 52-week lows. It just came off 52-week highs, in fact. So people acting like it's, actually I think it came in with all-time highs maybe. So, this isn't one like a death signal for Google. Two, I don't think it's like, oh my gosh, Google is like pound the table. It's so cheap right now.
No.
But I think there is some questions in terms of the free cash flow this company is actually going to spit out. And I don't know, I can't be on this too long, but it's interesting because back to my Amazon thing, Amazon's going to spit out over 30 billion in cash flow in Q4. So Amazon's on the back end of this like CapEx investment cycle to ensure moat. So it's really the thing too is if you're just buying Google blindly on this, just think about like how poorly Amazon performed while going through this CapEx cycle. Like, I'm not saying that it's like 100% the same thing. I mean, Google is cutting jobs. Amazon was going through adding a bunch. There's not 100%. It's not like a 1-to-1, but I think it's similar in terms of what the business is going through. That was kind of my takeaway. And like, once again, management did nothing to help themselves in the call for the share price.
Agreed.
in the near term.
It almost seems like it draws more parallel to not at the level that Meta went through, but when Meta went through the IDFA scares, right, with Apple and the moat around advertising with IDFA, it kind of seems like a very, very small chunk of that. But I don't know, like the CapEx, because did they ever say that the CapEx was directly related towards like, ensuring their ad moat? Because in my mind, I would think the CapEx would mostly be building out their hyperscale environment across GPC and YouTube.
That's what they said would be in 2023. In 2024, though, they were talking about AI and how they have to build that out.
Which would also be like hyperscale, right? But it's you're building compute for potentially the R&D spend you're doing for AI-based AdSense.
Right.
So it's probably going to be a little bit of both.
Both.
What I'm saying is it's for sure both is in there. It's not like 100% of the CapEx I didn't make this clear. I'm not saying 100% of this CapEx is the ensuring their dominance there, but the incremental increase, I think, is largely coming from that.
Yeah.
And so, because this company's going to have a run rate no matter what. I mean, Amazon, even though they're out of that cycle, they still have CapEx. Google is still going to have CapEx afterwards, but the equation changes a lot if I eat an incremental $5 billion a quarter in free cash flow, that changes for a couple of years. That changes a lot, how cheap I look or how many buybacks I can do. Yeah. Like I said this too. I wouldn't be surprised. I know Amazon has a buyback program out, but it's pretty small. I wouldn't be surprised if they come out and upscale that.
Oh. You know what? Okay, speaking of that, what do you think of Google doing buybacks right now?
They are,
because they've been hitting it pretty hard. I wouldn't say they're notoriously overpriced or underpriced. They kind of seem like fair value right now. So I'm not like totally against it.
That's just my only question. I don't get why tech companies are like, it's impossible to get. I guess they're just more worried that a dividend can't be done. Like you have to do it. But basically, I mean, they've been repurchasing stock for 3 years. But I think it's. This is a whole nother question I go into with a lot of these tech companies where everyone's like, their balance sheet is so good, but the best thing they can do is like buy back something at a 5% yield. And I'm talking about their own stock because that's what it's. But
yeah, I mean, I'd prefer if they were a little bit more selective. And if you look at the share buybacks and then you deduct how much they're actually diluting in stock-based comp,
Yeah.
It's not that all that impressive for the size of the firm.
No, it's
like what,
not.
40, little under 40 billion
Yeah, I think when I
a
did
year
the math,
for a almost $2 trillion enterprise.
yeah, I think like shares outstanding went down like 2%, 2.5%.
Yeah, on the margins.
So
Yeah, it was like around 2.5 to 3 or something like that year over year.
Yeah,
Splitting hairs.
So just to, for me, like it doesn't really change. I get frustrated with management just because it's like when you hear them talk, I swear on their earnings calls, you can't tell if they're AI or real people.
Seriously.
As
but-
you may not know.
Yeah, but I really don't think there's some questions that that would have been really nice for management to answer. Oh, the other thing that was weird this quarter, but well, I guess it was the restructuring costs, but the margins were lower than the normal Q4s for Google. But that's mostly, I think, based on one-time costs. The other thing was I don't think they broke out how much legal expenses. They actually explicitly did not break out how much legal expenses are embedded in these costs, which would have been nice to know. But they said you can contact IR and they'll break it out for you. So I guess I'd do that.
For what that's worth.
I love that part. Yeah.
Yeah.
Make it hard.
Are you going to be contacting IR?
I will, just because I'm curious, like what the actual legal expenses are, if they'll actually break that out. Because it'd be nice, because for those that don't know, there's a big lawsuit that they're going through with DOJ, right?
Mm-hmm.
And I mean, I hope that this isn't like something that happens every year. Ideally, this happens this one time. You know, it will happen again in the future, but like, you know, for modeling purposes, I would just count that as a one time. And these lawyer fees are not cheap.
Oh yeah, and that's a fear that I've mentioned before in the past, but I don't know if maybe I'm misremembering, but I thought I got laughed at.
But they would just have a
for like big tech in general, like that is a considerable fear that legal fees and governments may view them as a piggy bank of sorts. And it translates to at least, annoying legal fees going forward. But what do I know?
So just to summarize though, my thoughts is basically it's still got search, which is the great business. I really thought they did better than on everything other than search than I expected. I mean, like,
yeah,
I guess the only caveat is their SSP. Google Service, I think they call it Google Services.
Mm-hmm.
Which was down. But yeah, like cloud, absolutely phenomenal. Other bets even, which I really hate that categorization, but like, or that naming, but that did really well in the quarter. Like I think they was expected to have a loss of like, I want to say something like 1.2 billion. The loss came in at like 800 million. So they're doing a good job optimizing that and cutting costs there. Like I said, GCP is really GCP is inflecting. GCP is really turning the corner.
Look at last year negative, now positive operating income.
Yeah.
Did you see
that 9%
the
operating
chart
margin
that I shared about their operating margins? I shared it. Let me pull it up real quick.
Yeah, share it here and I'll bring it up.
I just got to pull it up. But I think it was originally done by Alphabeting. It's the one that put it together on his Substack. Or was it mostly borrowed ideas?
It was Unusual Whales, ironically enough.
Oh, did they share it? Let me see.
Yeah, no, that's going to be a really fun part to watch because they're hitting that tipping point of profitability or operating profitability in Google Cloud, and their roadmap to 20-25% margins in GPC is probably gonna happen pretty quickly.
Yeah. So if you look here from Q1 of 2020, and I just sent it in the private chat, so you can pull it up, to now, their operating margin has gone from negative 62% to positive 9.4.
Bring it up. Wow.
Yeah.
So that's doing it exceptionally well. And also like within this, there's the whole like cost savings within YouTube that you don't see. But that, I mean, YouTube, I think, continues to crush it. I heard a really weird, someone was saying like, well, the YouTube premium revenue, and I think it was just a bad take because I heard this and I intuitively thought this is wrong, but they said, oh, it looks like YouTube subscription revenue is up. That's a lower margin revenue. I was like, no, that's a higher margin revenue, unless they were thinking YouTube TV, but YouTube music, like those subscriptions, that's higher margin than ads. So I don't know what they.
I wish they would break it out because YouTube TV would inherently be a lower margin stream.
Yeah.
Yeah.
And if they're looking at YouTube growth just from YouTube TV, and YouTube Music, it would be nice to see exactly which segments are growing, because there's not a lot of money to be made in the like TV resale cable space. But yeah, they have been crushing it, and I think the thing that gets me really interested with a lot of the conversion over to YouTube Premium is that's going to be a lot more, I think, higher margin, but a lot more stable, right?
Mm-hmm.
You're not going to have the influx of, ad revenue for that percentage of their revenue streams.
I want to answer or comment on this comment here from Frozen IKEA. I'd rather own YouTube than Netflix. I agree with you, only if YouTube has Google behind it. YouTube by itself without a hyperscaler, I don't know about that.
That's kind of where I'm at right now, like at least with that comment, right? Because I mean, you think they're just providing the platform and then they're taking a fat cut of the ad revenue.
Oh yeah.
It is like they are basically creating the engine that drives, the algorithm machine to reinforce watch time, which they have more watch time on YouTube than Netflix does in the US, as far as streaming content. So just the economics of the business there is just so enticing to me because they don't have to spend a dime on content creation.
By the way, you're looking. That's the Google 10Q, or is it 10K that's up?
10K.
I want to see how they're, because just while we're on this, one of the things I always like to do with their 10K, if I'm looking at GCP, is seeing, because what you want to do is see what new signings actually look like. And what I like to do is compare deferred revenue growth along with revenue growth.
Yep.
Or you could, depending on what they call it in their, it's either RPOs, which is remaining performance obligations, or
another thing to point out is that
revenue.
I think they had around a $3 billion tailwind to net income because of the change in their depreciation schedule for their networking and compute assets.
Okay. So,
repeat that, sorry, because that's on me. I didn't.
They in the beginning of 2023, they changed the depreciation schedule of their network and compute assets, or their hyperscale environment, from 4 years to 6 years. So they depreciated less assets off of their compute environment, and that resulted in about a $3 billion tailwind to the bottom line.
But in fairness to that, I think that's a fair depreciation schedule, since AWS.
So I think it is too. Schedule. It's like the standard, but it gives you kind of a false sense of growth after that normalizes, right?
Sure, for sure. Yeah. So like, here's one of these things I like to look at. Just so let me pull up the comparison from Q4. Yeah, give me 1 second. So deferred, here we go. Okay, so they have it as under revenue backlog. Okay.
By the way, I just want to say to everyone watching, if you're enjoying the stream so far, feel free to leave a like. It's right there. Just click the thumbs up button.
So one of the things you have to know, and I've noticed this with Google Cloud, and maybe Jesse, or I don't know, maybe someone here can tell me, why this is. It seems like Q4 they always have a lot more signings, a lot more backlog than other quarters. Like their incremental jump is always a lot more.
With deferred revenue?
With
It
Google
could just
Cloud.
be the timing of the contracts and the renewals.
Yeah.
So
So if they happen to have and sometimes you'll see this in like Q4 where companies go for really big sales pushes.
Mhm.
So they'll say, hey, if you renew now in Q4, we'll give you a discount over the next so many years. They might be getting a larger lump sum of deferred revenue and contract renewals in Q4 in order to meet like sales goals.
Andrew,
is
when
my
you can zoom in.
That is my suspicion, but I have nothing to base that off of, to be fair.
so here's
Just anecdotes.
So here's the Google Cloud from the 10Q or 10K last year. So you can see, 26 million is the billion in revenue, not million. And then you see the revenue backlog here. Okay, 64.3 billion. And this is why I say like you want to look at this because you look at this year, 33 billion. Okay, nice growth. Their backlog also went up. So it's not like it's just being drained out of there. So their backlog went up 20%. Like 17, 18%.
Yeah.
So it's true growth. And like this is why I say like it's kind of lumpy. If you look at Q3's backlog was only 64.9 billion. So a lot of their signings and everything happens in Q4. I don't know. I haven't done analysis yet to see how that impacts like seasonally because margins have been so terrible on it historically. I don't know how it impacts like maybe there's seasonality to margins. But the other thing I just wanted to go through, I think this guy Alphabet just does a really. It's nice because you can look like he compiles his data in I think a really nice way. The actual like, it's not. It's to me it seemed less of an analysis more than just like taking the data and saying here's what happened and everything. So I like you get to see a nice visualization. It's just easy to put together, kind of seeing how the company's been performing over time.
Other bets.
But you can see like look how other like that's a good example. This is the impact of layoffs right here as you see like the loss declining from that. But you see, this is the one thing I want to look at. Look at corporate costs though. Like
yep, just
during
keeps going.
But this is all restructuring costs.
Mm-hmm.
So to Jesse's point, yeah, you have a $3 billion tailwind. You also have like this headwind from restructuring. So like it'll be interesting to see where it all plays out. When this stuff falls off, and it looks like it's probably a good chunk of this, I'd say like almost 2 billion for Q4 based on the amount that they
Did you guys catch that they said that I think they were going to have another 800 million in Q1 of severance?
Yeah.
Mm-hmm. So I don't think it's done yet.
Yeah.
They might have a drag over the next 2 quarters for further severance and restructuring.
Yeah.
Package hunters a whole.
Yeah, but
package hunters.
But I think you want that as a Google share.
Yeah,
like that sounds. By the way, if you work at Google, I'm not wishing you to lose your job. But what I'm trying to say is, you want them to control costs because that's been the problem. And by the way, go ahead.
No, I'm just agreeing with you.
I was going to say on search, it's interesting because the narrative is like search is like getting killed by other things. This trend here seems pretty positive to me. Yeah, like we all know, like 2022 is rough for them, but coming out of it seems to be growth.
That year-over-year comp for 2022, that is just tough, right?
Yeah.
For them to just be bouncing back this quick, I think says a lot. The comps for that year were really, really tough.
Yeah.
Does anyone else see Dunning-Kruger? Oh, now that is not Dunning-Kruger, but
and then
go
ahead.
Oh no, I was gonna say I'm really interested in this just because I'm like, okay, well I already have my position, but I'm like, okay, at what point do I think about building it out a little bit more because I feel like, that we could potentially be at an inflection point of negativity where we get a decent sized longer term pullback, right?
Yeah.
If this can continue on, which could lead to opportunity, or you're screwed. So
Yeah.
I thought added in a while. So if it's compelling enough, I'll add.
I have a hard time, like, to me, if I mean, even after the sell-off, I think there's, like, it's a good hold, but I can see better opportunities out there. I don't think it's sold off a ton. Like I said, it's not like this is I did think this was interesting. I mean, you can see the number of employees, the growth, and then the kind of decel of growth. But
yeah, I mean, when
it
was in the 80s, 90s, that was just like, oh man, that was the point where it was really juicy.
Right. So, and this is where I would say, like, capex as a percentage of revenue. See how this is going up, and that's like, where do we get to with this?
More. That's it. That's all we know. At least we know that there's no one time.
Yeah. So, anyways, my opinion was management could have done a really good job. Could have done a better job of just explaining what's going on, because I feel like a lot of, like, there's really, like, if you listen to it, there was a couple questions. One's like, what's capex going to be? Just give us some guidance. Doesn't have to be exact. What are the one-time impacts on margins? So, like, can we get a run rate margin? Is basically what they're asking. And is GCP reaccelerating because of AI? Is this reacceleration of growth that GCP had? Is it sustainable? Is it AI? What is it? And they didn't give an answer on any of those. And so I get why, for me, it kind of felt like this earnings report, I can see why some people would sell, but I don't see why you buy off it. And so, I actually thought some people are saying this chart is bearish. I actually think it's a bullish chart, but
they think it's bearish?
I think yeah.
What's the y-axis? It's time, right? But where from?
So x-axis. Yeah. So this is like looking at their reliance on, like, where their revenue is coming from over time. So it's going from 2004 to today, and you have Google properties, which is obviously things they own, and non-Google properties. And so, like, the person here is even saying, like, was quote saying this, like, without websites to be searchable and discoverable content, people would have less need for search engines. Like, it says, it remains an open question in my mind to what extent Google can be insulated if open web becomes increasingly crippled. It'd be terminal as Google than on YouTube.
Oh, I see what it's saying. So the web itself is consolidating.
Yes.
And that's making it a bit problematic
for search.
Search revenue.
Yeah, but, like, this to me is less of search dying because search is not dying, and more of Google's other investments doing well, GCP doing well, YouTube doing really well. Google One, which is Google Drive, doing well and growing.
Google Stadia.
So that's just my take. Not to be like, I think I'm more like where Google's at in their story. I think there's some questions where I would prefer. I'd prefer to be aligned with Amazon right now. Like, and I know Fabio likes to hear that.
Oh, shucks.
But look at where they're at in the CapEx cycle. Like, look at what Amazon's about to do. Like, maybe I'm wrong, but they're roughly the same market cap, right?
Mm-hmm.
Yeah,
but the valuation on Amazon when it was just about to end its CapEx cycle was, I guess you could say, the timing was perfect. Because you had the valuation, the cheapest it's been in quite a while on a forward basis. If you just knew to look, and it was just at the end of their capex cycle, which was Q4 of 2022. And before anyone dare say, "Oh, it's easy to say that now," I have a video, I have write-ups, all of that going back to that time, saying that that was the case.
Well,
So
yeah, and yeah, I mean, we were all here when we were going through it, and I think I jumped on it a little bit later than you. I think you were buying the 80s. I think my buys were like late 90s, early hundreds, and then I like added as it went up. But and I don't think as largely allocated as you are. But I think you have two companies, similar market cap, and in fact, I think actually when you look at, because Google's got a net cash position, Amazon doesn't.
Yeah.
I think they're almost identical enterprise values.
Yeah.
One's about to spit out 30 billion of free cash flow. The other one's about to spit out 8, or just spat out 8 billion of free cash flow.
Well, and man, just
And-
like AWS alone, right? AWS over GPC, like, oh my God, that AWS is going to be a cash cow for them for decades, and it's only going to grow, unless they royally screw up somehow.
And AWS is fundamentally better than GCP, but I'd say it's going to be the case for both of them. Not as
Cows are not ESG friendly. You
I
guys.
think depending on how, I mean, yeah. I don't know if GPC is going to have as much growth when it comes to cloud compute as AWS. Like percentage basis, they probably will because they're smaller.
Right.
But I think like Google is going to have Google's cash cows is going to be a GPC and YouTube, right?
You mean search
Mhm.
on YouTube?
What was that?
You mean search in YouTube?
Yeah. Search YouTube, but also I think GPC is going to be able to get into that 20-30% margin mark.
Oh yeah.
I feel like search at this point is almost just like funding the business to create more revenue streams.
Mhm.
I mean,
You know what I mean? Like they're just kind of milking it, and they're gonna do the capex they need to do and the R&D they need to do to hopefully maintain that moat. But it feels like their growth is potentially not going to be coming from search. Like it will grow, but like I think YouTube and GPC, we could see them slowly become a larger and larger and larger chunk of Google overall.
I definitely think they will be large. I mean, they're growing faster. I don't see search though as like a melting ice cube.
No.
Like it's still going to grow. It won't grow as fast as the other things. But I think it's like, let me put it this way. If there was right now a serious question, like a serious question as to whether or not search is a growing business that'll be sustainable.
Oh, it'd be down like 40%.
Yeah, Google would be doing a lot worse right now. So, like, I agree with you. They're using their free cash flow to invest into their other businesses, but I still think search is a growing business, and I think a lot of their capex is still trying to preserve that moat.
Yeah, definitely.
But that's all. That's all I have, guys. I'll see myself out now.
All right, hang in there.
I got to
Andrew.
drop here too.
Hang in there, Jesse.
All right, so we had the Google conversation. Thank you guys so much for joining in. Bacon and I will continue through the topics at hand.
Do not click end stream this time as I leave.
Oh yeah.
I will click leave studio, not end stream.
Leave and listen. Leave and listen.
That was so funny when you did that. See you guys.
Bye.
So my quick summary, because I wanted to let Andrew especially get his thoughts out because he had limited time, was, and I shared it on Twitter already, so I can pull up. And if you're not following me on Twitter, what are you doing? Follow me on Twitter. Which, for whatever reason, I think this is a good thing. We've actually experienced quite a bit of growth in Twitter recently, and so it seems like the Twitter is gaining traction.
Is it real people? Because I've been
No, it's real people.
Oh, all right. Yeah, then you've been getting real proper traction because mine have all been like porn bots, basically.
Oh, no.
Which is
Literal
really
people,
sad.
because I see some people are sharing the tweets, and then some of the tweets get responses by certain other people who have a lot of followers, and then I think it just goes from there.
Happy
Okay,
for you.
so let me go ahead and share this tab. This is basically what I shared on Twitter,
Mhm.
and this is one of the reasons to follow me on Twitter if you don't want to just see me only on YouTube. And basically the general thoughts is the management team at Alphabet, I think, could do a better job at communicating with the investor base what it is that Alphabet is moving towards or striving for. The energy levels, you could argue, in terms of presentation skills, is rather lackluster, especially when compared to something like Microsoft that reported right after. Now, despite all the issues I have with management team, and I've had them for roughly 6 years, and basically the saving grace of Alphabet is it's such a good business that they can afford to do all these other, let's call it, mistakes. And I use the quote or a portion of the quote just for, I guess, not comedic relief, but to kind of say, you see, I got to use it. Good times create weak men. So Google's in that phase right now. All right. So I mean, at least for the time being, there's no tough times on the horizon. And I don't even know if during a tough time, whatever that would mean for something like Alphabet, would the company even survive? But essentially, that's how I kind of view the management team. They are the management team that's not there during let's call it the wartime management team. They're there because nothing really changes or needs to change, and plenty of cash is coming in. So there's not really that urgency that we might see in other businesses. And I feel like when I look at Microsoft, they have plenty of cash coming in, but their management team is on the ball. They're constantly thinking, how do we get the product out now? How do we get the best product out now? And even if it's not the best product, how do we market it better? So it could also be that Alphabet's management team doesn't care to market it, which is also could be a sign of strength. But the main message that I kind of was trying to get across in this tweet is that Alphabet is such a good business that despite all those concerns, it's almost irrelevant. And so I continue to hold Alphabet. I do not plan on selling a penny of Alphabet for the foreseeable future. And this is after, if you recall our live stream back in early 2023 when ChatGPT was coming around, there were concerns about what would happen to Alphabet's moat in search, and looks like, hindsight's 2020, but that was a nothing burger. We'll see how things progress from here if something else comes in the way of Alphabet and does actually threaten their moat. But for the time being, there's nothing really out there. And as far as management's execution, okay, we'll put that to the side. The business is doing just fine, and the assets that they do own are unique in nature that no one is able to replicate them meaningfully. Something that management team at Microsoft have actually touted as sort of like a dig on Amazon. I'm sorry, not Amazon, Alphabet, accusing them of being a monopoly. I think it was Sundar Pichai who was actually stating, hey, it's really difficult to break into search. Him referring to Microsoft Bing and kind of citing that as and their attempt to break in, but they've made no strong inroads as of late.
Don't you love
So,
how the tables have turned on that one? Like,
yeah.
if people know their entrepreneurial history or business history.
Yes.
Yeah.
Yes, because Alphabet accused the other back when Bill Gates was in charge, and they won.
Yes, they did. They did.
So that's pretty much the gist for Alphabet. My plans are unchanged. I'm not in a rush to add. I think I share the same thoughts as Andrew and Jesse when they were on and discussing how they have no plans to add, and I've stated that here in the tweet earlier today. So my thoughts haven't changed since I tweeted this till now. And I felt that way for quite some time because it's actually been quite some time since I've added to Alphabet. I felt as though there were better opportunities in other businesses, and especially after this recent sell-off, I think those opportunities ended up pulling through a little bit better. But that doesn't mean that we might not be presented with one here shortly, and I would definitely take advantage of it.
What was your favorite reply to this tweet?
I haven't seen.
Oh, very sad.
Okay, so let's go on to next topic or next earnings, and that's Microsoft. Before we get there, I have a question here. Capital Mindset, any updates on REITs? Still interesting in 2024? Yeah, my feelings on REITs has rather remained unchanged. I've really focused the portfolio into just a few REITs. But other than that, Kilroy, I think as of today, is getting back into the territory where I might reinvest the dividends. It's just on the verge of getting to that point. And there's another REIT that I've found recently because a club member shared it with me. And I think it's really interesting, but I'm still doing the research on that one. So REITs still make up roughly right now around 7-ish% of the portfolio. And that's because other investments have gone up a lot. So at one point, I think they were, well, actually, that's because we sold off some of the REITs. So I actually have to check the new percentage. They actually might be lower because I got rid of Sun Communities, American Homes for Rent, and now it's just Agree, Kilroy. Yeah, so I have to check, and Alexandra Real Estate. So I think it's actually a bit lower, but more concentrated. Okay, so question about rates. I remember Fabi saying that when rates go down, SAFE would be a better play than TLT. Recently, TLT has barely moved, but SAFE went down. Can you elaborate a bit more on it? So there is a caveat to it because TLT, well, you're getting exposure to the long end of the curve. SAFE, I said, is going to be almost like a leveraged play on interest rates. It'll be a safer play than TMF, but not as necessarily safe as something like a TLT. It's probably going to be a bit more volatile than TLT, but it's not as degenerate as something like a TMF, which is a triple leveraged, long duration bond instrument. So that's what we were discussing earlier, because SAFE, the loans, or not the loans, the leases on the books, they're roughly speaking about 100 years or in the 90 years, et cetera, but very long duration leases. And so the pricing is going to be very sensitive. The value of those rentals is going to be very tied to where rates are at. Okay, so that's the play that SAFE provides. But the reason why it's not as degenerate as something like a TMF is you don't have to worry necessarily about the timing as much, because remember, TMF, there's a lot of scenarios in which you do lose your shirt. One of them being, for example, if TMF doesn't experience any volatility, let's say it remains flat, you do really poorly, or depending on how or that dispersed that volatility is. So let's say rates don't do anything for a while and then suddenly go down at the end of the year, you'll still do pretty poorly. Something like a SAFE, because you're buying the comments, a little bit different. So a TLT is a more direct way of playing rates coming down, but SAFE, I hypothesize, will actually do a lot better in that scenario. But it's going to be a bit more volatile than something like a TLT, or I suspect it will. So
It's not for me.
Yeah, no, and I mean, you have to at the end of the day, if you're going to play any of those, you want to try your best to time it, and you got to ask yourself, is it worth it? Is it worth it to time, roughly speaking, where rates are going to come down? So TLT, do you want to get involvement now or a little bit later? Do you want to try to time it when you think rates are going to come down? Is it worth it on your end to make that investing decision or timing that investment? Maybe, maybe not. Okay, so let's discuss Microsoft earnings. Microsoft earnings, we saw, this will be brief because with Microsoft, I have no investment in it. I'm just going to say it was great all around. The only reason why I don't think it's up on the earnings is because of the current valuation. And roughly speaking, the rest of the market has been seemingly selling off. So it remaining slightly flat just after earnings after hours, because today we'll look at the price action. I think it is down today. So it's down roughly 3% today. But after hours, it was pretty much flat. And I think that relative to something like Google is relative strength of the Magnificent Seven. We're going to see what happens with Amazon and Meta, who report tomorrow. And that is why the title, or in the thumbnail, you saw half my net worth. That's because that is tomorrow. And Meta got over 400. Now it's under 400. Hey, I'm not really too fazed by the fact that those two companies are reporting tomorrow. It's going to be just peachy. I'm trying to be funny with Bacon here. Okay, so anyways, with Microsoft, the short and sweet response that I got to give to you is earnings were amazing. Management team did a really good job of presenting the numbers, did a really good job of presenting the strategy. Really brought a little bit more attention to some of the products that they were coming out with. And it remains, as Andrew says, one of the best, if not the best. Well, no, he says the best company in the entire world today. So I think my issues with not investing in Microsoft is just frankly the setup for me is not ideal. The valuation implies a story to play out, and if that story doesn't play out, then the returns are going to be quite lackluster, in my opinion. A lot of the returns that we saw from Microsoft in the past decade has been through legitimate growth, but there has been a strong portion of that return from multiple expansion. So you had both plays or both factors helping your returns. And I don't want to bet on that same tailwind in the future. And so something like Microsoft, when you have other investing opportunities, I don't find right now at current prices too much attraction to invest in it. Now, you could bet on multiple maintenance and that they're going to grow at mid-teens for the foreseeable future. That's a possibility, and you could do well. And that those implied returns are actually quite strong. The business quality is superb, balance sheet superb, the best credit rating you can possibly have. I think it's them and Johnson & Johnson who have the AAA credit rating. I don't even think Apple has that. So you have everything all under one bucket. You have all the exciting investments you could possibly think of: artificial intelligence, generalized software for business solutions, one of the stickiest software products on this planet. They're also pretty much in every computer device that you see besides the other competitor, only Apple. And then there's Chromebook all the way to the side. You also have gaming. So there's a lot to really like here with Microsoft. And somehow they got the Activision deal through, right? So you see Amazon can't buy a vacuum cleaner, but Microsoft can buy the largest gaming publisher on the planet. You ask me how? What world do we live in? I don't know. You tell me. I have no idea what the standards are anymore because Microsoft's allowed to buy the largest game developer and they own a gaming console and they couldn't make that argument. But then Amazon's like, I want to buy a vacuum cleaner that's probably going to go bankrupt if we don't buy it. And the government's like, nah, you can't do that. And now what's probably going to happen, and I like the way Jesse put it bluntly, they're going to go bankrupt and then Amazon's going to buy the data. So, because that's all that Amazon wants from it. So I don't understand regulators from that viewpoint. How one could win in the courts and the other ones couldn't. So, okay. Now that kind of covers Microsoft. That was short and sweet. Tomorrow we have Amazon and Meta.
Yes.
Now I'm gonna let Bacon say, do you have anything to share regarding Amazon and Meta as far as what you feel or think they're going to do tomorrow?
I'm glad that I passively own them, regardless of if they go up or down or sideways.
Through the index.
Yeah. So like for me, it's just one big shrug emoji. Like because you have me on as a talking head, I say, you know what? Let's go up. Let's go up.
Meta is going to go up or Amazon's going to go up?
Both.
Both?
Yeah, wouldn't that be
I'm
hilarious if
suspect
I'm
of that.
wrong? Wouldn't it be hilarious like when I'm inevitably wrong and everybody's like, "You cursed us, you asshole."
Well, I'm suspect of that. I think that given the current market reaction, I think that the market going into this earnings season was looking for reasons to sell
Yeah,
off.
I suspect that.
Like the rally we had in 2023 was really strong. And
Mhm.
so giving up, 10, 20% from the recent highs is not out of the ordinary. And we
Yeah.
could still finish the year flat-ish, but have just extended volatility throughout this year. So the this earnings season in particular, I think that, for example, Google's was pretty good, sold off. Probably it could continue selling off under some negative momentum. But the business really hasn't changed. It's just the market participants are just looking for any little reason to take profits. I might see the same thing or foresee the same thing happening with Meta and Amazon. Now, Meta, I don't have plans to add any more Meta, even if it's sold off, even if it's in the low 300s. Like if we retrace back to around $300 a share, which if you think that's impossible, I mean, let me remind you, Meta is probably the most volatile big tech name I've ever invested in my life. Because it's done it multiple times. It's actually had a big sell-off back in 2018. I know some of you weren't investing in 2018, but if you go back in the charts, actually, we'll just go back ourselves. So if I go back to 2018, I can just show you. So from the peak to 2018 to the trough, I mean, it sold off like 40%. And if you weren't investing back then, yeah, there you go. And so it's done it. It's done it before. Not that you should look at that as some sort of pattern that just gets repeated. Don't do that. But I'm saying that of the big tech names, it has the most like rampant and changing emotions among investors.
What are you talking about? There's Tesla. You're talking about Meta.
I am
Tesla's
ignoring
right
Tesla.
here.
I'm ignoring Tesla. We're not gonna. You know what? We'll talk about Tesla in a little bit. That is one of the topics we're covering in a little bit. And then Amazon is the one that I would be really interested in accumulating more shares of. Amazon's share price right now is not the worst, but I would prefer it to go lower. And so because of the stage where I'm at, and club members, you guys know, because you guys see the portfolio, I add to it every month. And I've told some of you, because of the stage of where I'm at, because I don't have a fixed amount of capital and I'm constantly adding and I'm trying to grow income and then add more eventually, then I prefer, or I would want, some sort of near-term sell-offs. If I was closer to retirement, I might feel a little bit differently depending on how much capital I've accumulated. If I've accumulated so much capital that, you know, the incremental returns, like let's say generating a 1%, okay, let's use the dividend yield example. 1% dividend yield on some X amount of capital is enough to cover all living expenses and then some, then I wouldn't care about any near-term volatility whatsoever. I'd be beyond caring about volatility. But when you're a young person and you're contributing to your portfolio, you're also in that camp that you're kind of should be beyond caring about volatility. Volatility isn't your enemy, it's more your friend, especially if you're contributing on a consistent basis. And so that will just present new and maybe even better opportunities to come. So Amazon continuing to going up, sure, it can stroke my ego a little bit, and it looks nice when I log into my broker and I see, oh, new all-time high, oh, new all-time high, oh, new all-time high. But does it really benefit me longer term? Probably not. I'd probably have to go and, you know, say, okay, well, if I don't perceive Amazon as an opportunity more, I'll have to go and hunt for something else, something new. But why would if I could help it, I'd rather contribute more to my core ideas. And it's not just Amazon. There's a couple in the portfolio that I would hope have some sort of near-term weakness, and I could contribute more to them instead of having to, in my opinion, hunt for new ideas. And the reason why I say in my opinion is because a different onlooker might see the same stock and think that it's fairly valued or undervalued, but I might think it's overvalued or fairly valued. And I'm not opposed to buying a company of mine that's fairly valued. It's when it's overvalued that I perceive an issue. Right now, I think Amazon at current price is more like fairly to slightly undervalued, to slightly. It was much better, I think, when it was closer to the $100 mark, when it was under $100 mark, and I did my write-up for the club members. That was like the ideal price point. But now where it is here, I would prefer if we saw a pullback here tomorrow, and I'm feeling quite confident that that's going to happen. If it doesn't, oh well.
But with Amazon, wouldn't some say winners keep on winning? Winners average into winners and losers average into losers. Just to be a little playful.
Yeah, that is a quoting former YouTuber, former finance YouTuber. Yeah,
Well, I thought I
philosophy is
heard it from other people as well, but like,
Oh,
fair
if
to
you heard it
say.
from other people as
Yeah.
well, yeah.
Yeah, I
To be
wasn't quoting
seri-
him specifically, but
a serious response to it
Yeah.
would be no. That is not a winning philosophy. But in summary, what I expect tomorrow is probably good results from them. It's just where the market's appetite is right now. I expect a lot of players again are looking for any reason to take profits, and we might see a pullback. And I think that's perfectly healthy. I think there's nothing wrong with that. I wouldn't panic. I wouldn't really care, honestly. And again, Meta would have to fall quite significantly for me to even raise an eyebrow. Amazon is the one I'm going to be eyeing. And what I'm eyeing on Amazon is always the same. It's the same that it's been in the past several quarters. It's the same that it's been when I did my Amazon video. The core thesis is still there, and it's those same pillars. And I'm looking at those same pillars. Has anything changed? Okay, nothing's changed. How are those three measures doing? If those three measures are still doing well, I will consider contributing more to Amazon if the price is right. If the price rallies a lot, my position, I'm content with the sizing, and okay, we'll find something else eventually. I'm not going to rush into it, and at least at these prices. Would I sell? No. I would let the winners run, just like I've done with Netflix. I've essentially just let that winner run, and Netflix has continued to perform really, really well. I've already done a live stream, and then we're not going to talk about them. Okay.
They had their time in the sun.
They've had their time in the sun. They don't deserve any more time. Now we're going to talk about macro.
Oh,
I'm
no.
just kidding. We have another earnings report to go over.
Yep.
And that is Croc. No, I'm kidding. It's not Crocs.
I was gonna say they were way too early, man. The Feb 15. Come on.
Rockwell Automation. So
There we go.
This one is a shout out to a club member, because this is one of your favorites. And it is down quite a bit today, 17.56%. I'll give everyone here the Spark Notes who's watching. So Rockwell Automation has been a very hot stock in the past 5 years, discounting or removing today's price action. You can see what happened in the 2021 market, especially. I mean, let me just start with this. Rockwell Automation. Automation. So basically what they work in is industrial automation. And the issues currently plaguing Rockwell Automation is mainly everything to do with supplying inventory to their customers. So they have a really strong backlog, but the problem is not the demand side of the equation, it's the supply side of the equation. And the reason why that's such a big problem is, well, if you don't have the ability to serve your customers could get a little upset with you and say, well, I'm not waiting 2 years for this product. I'm just making up numbers, but hypothetically, I'm not waiting 2 years for this product. I'm going to go with that competitor over there. That competitor over there, while they have an inferior product to you, they will get it to me next month. And my business can't afford to wait 2 years for your product. Although I would love to have your product, I'm going to have to go with them. And if they win my business, now there might be a bit of service contracts attached to that. And there's a whole load of foreseeable sales that have now been lost. And so that's why that's a problem. They're not necessarily in the case of even Boeing has to sort of deal with this issue because they're not alone. There's technically Airbus. And Boeing's loss is Airbus's gain. Airbus's loss is Boeing's gain. For them, it's more of a practical duopoly for commercial airliners. But Rockwell Automation isn't necessarily in a, like what I just described, the practical duopoly between them and someone else. There's another one. Siemens is a large competitor to Rockwell Automation. And so seeing the price action today is quite interesting. I think it is decently well-deserved. When I listen to the earnings call, it seems like they have a plan in place to fix the supply chain, but that's not going to take into effect until approximately next year. And so similar to other stocks that we've covered in the past, like Tyson, who's had to fix their supply chains, it could be dead money for quite some time, meaning you might have time to accumulate if you're interested. If this is a company that interests you, you might have the whole of 2024 or a good portion of it to accumulate shares. And remember that once the guidance begins to change, they don't have to show the results right then and there. It's once the guidance begins to change, the market starts to flip in terms of optimism. Then that's probably when you're going to see the strong price action. But re-rating it here is, I think, fair because it's taking into account the period of time that it's probably going to be in recovery mode. And so growth is going to be muted for 2024 and reaccelerate in the future, roughly, I think it was end of 2025 and 2026. So, or into 2026, not end of 2026. So I think it's end of 2025. Okay, so that pretty much covers Rockwell Automation. Again, I told you I'd give you the Spark Notes so we can get to the other topics. And the most interesting topic to Bacon, because he's a macro nerd here.
No.
He loves macro. He can't shut up about it.
It's false.
Yeah, it's completely false. It's quite the opposite.
False.
He hates this topic. He actually probably wants to.
No. To be fair, like I try to be as net neutral as I can be. I'm just aware that macro is a place where it's very, very easy for talking heads to get away with things that they probably shouldn't. Yeah, shout out to you, strongman.
Oh, you. Yeah. Well, we got to do the Roo Rabble. The last time we did the Roo Rabble, I was like recovering. I destroyed my sleep schedule. I literally slept through it. I woke up and you guys were doing the Roo Rabble on Saturday. It was not okay. It's not good.
Were you? No, I'm not going to say. I'm not going to say.
Where? Why? What? No.
Yeah. I'm not. Yeah.
No, I think I was at Disney the day before, and I stayed pretty late. Which now, now I'm going to Disney, so it's just like Disney. Okay. See, it is the war cry, cry for the king of the Roos.
Roo. Yee! Shout out to you, Swaggy Pig. It's the penguin for me. Like any penguin related people, like dogs, cats, like for whatever reason, it just Anyways, macro though.
So macro. Super important stuff. If you don't pay attention to macro, you will underperform, guaranteed. Sarcasm, and more sarcasm. So what we saw today was the Federal Reserve essentially say, "Hey, we're not going to raise rates." Market looked at that again. Actually, we're kind of just throwing fluff into the air. It could be markets are reacting to the earnings, could be the markets are reacting to the announcement by the Fed. It could be a mix of either in whatever weighting you want. Point is, today Federal Reserve announced, or Jerome Powell spoke and said, we're not going to be raising rates for the foreseeable future. It seems like they're not going to be doing it, so we'll wait for the summer to see if they change their mind. Now, what's interesting today is that the 10-year yield did what? Bacon.
It did the thing. Yeah.
It did the down thing.
It did the up thing. Because you always gaslight me. You could have said that it went flat, and I would have been like, it went straight up. Or
it went flat.
At the same time.
But yeah, 10-year yields basically said we don't care. We don't care what you say.
Yep.
And so kind of betting against the Fed. Remember that the Fed has a lot of control on the short end of the curve, not the long end of the curve. Mm-hmm. The long end of the curve, because of, let's call it, without getting into it, I do have videos on this topic. So if you're so curious, which one?
Influences rates, not the rate setter per se.
Yes, exactly. It's an influencer, not so much the setter. Now, the part that's interesting is we're still inverted. We've been inverted since I think July of 2022, and typically we don't observe observable recession. We don't observe a recession until after the yield curve uninverts. Now, some have argued that this indicator is now broken due to the amount of stimulus that's been injected into the economy, and so this time truly is different. I'm not going to sit here and say it is or isn't. I'm just going to say, or observing, that historically, when we've observed observable recession, as in unemployment rate rising and all that jazz, it doesn't happen until after the uninversion. Therefore, any financial influencer, let me just pull one up just for the shits and giggles of it. But we have Jay Bravo. Let's just go through all of them at this point.
Are you is there intention to
I'm
share
sharing
them?
here. So this guy, right? So if this guy, he's completely off. He's going to say recession forever until it finally happens. And then he's going to say, I told you so. So there's Jay Bravo. There's, I think, Stephen Van Meter is another
Oh,
one.
this guy.
So on and on and on. There's going to be a ton of these guys that have been saying this for, I don't know, the whole time that they've been on YouTube, for the most part. And so the reason why they do this is because it gets a lot of views. By the way, fun fact, it gets a lot of views with the older crowd. So if you are of the older crowd, shout out to you for watching Capital Mindset. I know that for the demographic, the vast majority of you are in the cohort from 26 to 34. And then we do have some in the older crowd. I do see you guys in the analytics. And then we have very few in the younger crowd, which I think is a very good thing. Like very, very few. I think they're our smallest cohort. So that's a good thing.
Really?
That
Not
means that
ladies?
we make content that's too boring.
not ladies?
Oh, no, gender wise, we're roughly 10% female.
Hey, shout out to you, 10%ers.
Yeah, 10% female. So shout out to you guys. And then 90% male.
Yeah.
But yeah, in terms of age category, the smallest cohort is the youngest category. Or actually maybe the super old cohort is the smallest because that's 0, but I'm not counting them. I understand why I'm not interesting to them. But yeah, the younger cohort is the smallest of the measured cohorts that have a value greater than 1. Okay, that's how I'm going to classify it. Oh yes, word has reached me, the little birdies, because that's how I find out everything. I don't watch these people.
Same here.
Somehow
I try
the
not
little
to.
birdies just kind of
Yeah.
information just gathers and then just gets to me, and then I just like kind of find out and know.
Yep.
So yes, he did buy Blowfi. No. It's Lincoln. Not the 25. There's one that's younger than that.
Mhm.
So no, 25. That's still a
teens.
sizable category. I think they outstrip the ones that are, I think, like 50 and above.
Yeah.
So that young group, that's 25. I think is it 18 to 25?
Something like that.
Yeah, I think they outstrip, if I remember correctly, the 50 something and above. But the second largest is the one that comes after the 35s. So 36 to 44, I think it is.
Yeah.
Anyways, so market crash probably not going to happen because of the reasons that these guys stated. It will happen for a reason that is unbeknownst to what we know now, and it could happen. Yes, the recession could happen, but unlikely to be observed until after the yield curve reinverts or uninverts, based off of historical observations. This time could be different. Who knows? Okay, so topic: Elon Musk loses $50 billion. Okay, so $50 billion.
Yep. Is it for me? I just
19, and I do be bored. Yeah, because we don't have the flashing lights and stuff, and we don't go, oh my gosh.
we don't keep up with all the cool lingo. And
Yeah. Also that.
But yeah, so with Elon, are we blaming this on the Delaware courts?
Okay, that is the most interesting viewpoint I've seen. I've seen that recent take, and
That
just
is the
blaming
narrative.
the Delaware courts, because
Yeah.
the reason why corporations incorporate in Delaware is because the courts are quite favorable to corporations. Okay, that's why a lot of publicly traded companies incorporate in Delaware. Okay, getting that out of the way. For some reason, it got into retail people's minds that, oh my God, the Delaware court ruled against Elon Musk. They must be terrible judges over there. We should incorporate in another place. And because these are people that didn't go to university for
corporate law,
anything regarding where they ever touched a class dedicated to business law.
Yeah.
If you've been to any class that has anything to do with business law, because this should have been one of the lessons that you learned at one point, just because it's a fun fact that everyone should know, is that Delaware has very favorable laws protecting businesses from lawsuits, and other states are not so nice. So incorporating in Delaware, if you look at most publicly traded companies, you will see a huge proportion of them are incorporated in Delaware.
Yep.
So that happened. And basically, we see Elon Musk lost $50 billion in stock options because his payment was denied by the court on the basis that it was too much and unfair to shareholders. Some of the arguments laid forth were as follows: that the board members at the time where the compensation package was approved were not sufficiently independent from Elon Musk, being close friends to him, one of them being his brother. And so that was some of the arguments. Now, the criteria at which Elon Musk would earn the payment package was fulfilled. And it was, let's call it at the time, a really pie in the sky achievement. Now, on that basis alone, I almost feel like he should be compensated for that, because it was at the time some crazy number. No one thought at that time, if you think that someone thought that, please let me know. Besides Kathy Wood, but Kathy Wood's like throwing numbers out all the time.
Yeah, of course.
That it would reach I think it was like 600 billion market cap, something crazy. That was the implied price. And it did that. And then therefore he was owed based off of that. But no one thought that it would do that. So just on that basis alone, I'm just like, well, at this point, he kind of did something, or not he did, but something happened that, you didn't think was even possible. Let's be honest. And it did happen. So, it was agreed upon, pay up. Now, some of the kind of pushback for the denial of the payment was that, okay, well, now they just have to change up the language in favor of what the judge wanted in the language or the terms, and then the payment can go through, or another compensation package can go through of similar magnitude. Or they can just drop a new payment package with different numbers, maybe make it slightly less, and boohoo, it goes from 55 or whatever it was to like 25. Whoa, cry me a river. He'll cry with his billions.
Yeah.
But the real crux, or the real story behind this, is Elon Musk feels as though he can't really involve himself too much with Tesla because AI projects, because he doesn't feel comfortable with not having a controlling ownership of the business, because he thinks
25%.
AI is very dangerous.
Yeah, he says 25% voting. He was very clear with his language for once. Voting. 25% voting.
Yeah.
Yeah.
No. He wants 25% voting power, and he's threatening, almost without directly threatening. He's kind of saying, well, I don't feel comfortable. And he has these other AI projects on the side, such as XAI. I think it's one of those new startups is called, and it's actually receiving funding offerings. And honestly, if I'm looking at it, if I'm a Tesla shareholder, I would kind of already, well, remember, the valuation of Tesla is frankly held up upon hopes and dreams. And so if those hopes and dreams are now crushed, then a lot of huge reasons as for the valuation of Tesla starts to go away. And it starts to be valued more on the present reality of Tesla. Remember that Tesla has the implied success of FSD built into the price, has the implied success of the, I would call the, well, that kind of goes in with FSD, but the artificial intelligence that would allow it to navigate. Yeah, Dojo, but not necessarily Dojo, but just generalized artificial intelligence in terms of image recognition for driving purposes. So that kind of goes in line with FSD. Dojo is another thing, but because Dojo, he did say, was pie in the sky project recently. And I don't know if that was necessarily implied success in the share price, because before Dojo was announced, Tesla was around this price. No? Or am I misremembering?
I don't know. It depends on the people in question, as far as, yeah, because not everyone's Kathy Wood, not everyone's Fabio.
Fair enough. Which I feel like I'm like, would you call me a fence sitter, like milquetoast fence sitter on this issue?
I would say that you do your best to be as neutral or in the financial terms, conservative as far as presenting information.
Yeah, I mean, I don't hate the company.
Yeah.
I wouldn't touch the company valuation wise. I
Yeah.
would touch it the product wise, and I have. And I don't really have too much negative to say about the product per se. But I can't get around the fact that the valuation is built on hopes and dreams. And even at, like, let's say a $300 billion market cap for Tesla is still something to brag about. Okay. Like that's an accomplishment. That implied multiple is an accomplishment. For a company that sells vehicles, a
Yeah. Oh,
very
yeah.
capex intense
Mhm.
business. That's great. You've done a good job. So I'm gonna buy Tesla with your funds. Yes, that's how I feel. I wouldn't buy Tesla with my funds.
I just think that the narrative though with Musk is just so tired and boring, honestly. Like everybody like I'm all for free speech. That being said, everybody's blaming it, or people that are blaming it on the courts tend to forget that it was Elon who offered the stupid price to buy Twitter,
Mhm.
then at the time Twitter. Uh filings were made, and then all of a sudden, oh no, I'm Elon, I'm Team Elon, gotta pull back the price. And then it was the Delaware courts that said, oh no, you guys started this ball, it's got to go through, or you're gonna pay up a big breakup fee. Like, all about free speech, but consequences for your guy. Whatever.
Yeah, and he is a very divisive figure
Yeah.
today's day and age, and I do see him on Twitter getting more and more political. So that's going to inevitably. I think he's going to run for office at some point. He can't become president, but he probably run for some form of office in his later years.
Yeah.
I don't think right now, because I see him doing kind of that setup where he is being more vocally active on certain issues, and I wouldn't put it past him to do that. And remember, it's like Maslow's hierarchy of needs. So
Oh yeah.
as you start to satisfy certain parts of the pyramid, you start to look for other things that are beyond material. And Elon Musk being the richest individual non-governmental person in the world, because of course you have the Saudi princes, etc., and Vladimir Putin. But with Elon Musk, you have an individual who generated his wealth, not, well, let's call it net worth, not from a government, but instead is trying to fulfill that next thing, which is now more about the image, how people perceive him, his legacy. And that becomes more important because he can get whatever he wants physically. Like he can get, whatever yacht he wants, whatever private jet he wants. There's really nothing out of reach anymore. He could eat at any restaurant in the entire world that he could ever want, get whatever rare ingredients brought to him from whatever methodology, and it's nothing. He's now where he's on a different game than almost every single other person on the planet. Probably again only rivaled by Saudi princes or dictatorial individuals. So yeah.
You know what? I think I may have the final stamp for my take on Elon. He is the Kardashian of business.
That's bad because I have the Kardashians blocked. I recently included in my internet filter Taylor Swift, so I don't have to see her anymore. But yeah, I have a couple celebrities just blocked. I can't even Google them. If I Google them, nothing shows up. It's really good.
There's the hot take. There's the clip that'll get me canceled.
What?
me equating Elon to a Kardashian.
I mean, I wouldn't go that far because the Kardashians,
or like the mom Kardashian, like she's really savvy as far as business goes. Like I would put her like far above Elon in that regard, because at least she didn't do a joke offer to buy Twitter and then be forced to buy Twitter at that price.
yeah. I mean, I think that the Twitter story, we would have to see if he ends up getting ruined from it, then it's like we can point and laugh. But I wouldn't point and laugh yet.
Just yet, yeah.
Yeah, I think it's way too soon to point and laugh and say, look at him, he screwed up Twitter, because I see what he's done with Twitter, and I actually want to point out more towards. By the way, this is not for the cult members, so cult members, you shouldn't watch this live stream. I'm not talking about Tesla cult members. Talking about a new cult that I've started.
I'm aware. I am aware.
Cult members of my new cult that I've started. Blockheads, ignore what I'm about to say. What I'm about to say is only to trick the normies and to think I'm on their side. But anyways, Jack Dorsey is probably one of the worst managers ever. Okay, because for Elon Musk to come in and basically destroy, annihilate, decimate the company. Not decimate, sorry. The whatever the verse of, there's not a word for it, because decimation is losing 10%.
Yes. Thank you. Everybody misuses decimation.
Oh, no, decimation. For those who don't know, decimation
10%.
doesn't mean to be like destroyed 70%.
Yes.
It's 10%. That's
Yes.
the definition.
Yes.
Yeah, it comes from the Roman tactic of decimation, when you would decimate the legion. But
draw lots every night. That 1% out of 10 gets.
That'd be horrific.
That is horrific. But like that being said, though, like you got 10 fingies. If you're like healthy and normal, you lose a pinky, like that'd be painful. But like you're still able to do things with your hands.
Yeah. Yeah, you can still do it.
Yeah.
But the opposite, almost like reverse decimation, you only keep roughly 10-15%. In this case, it was 15% of the company and still run. Well, prior management was not on the ball. And that's Jack Dorsey. We also have Jack Dorsey. Again, cult members, please ignore everything I'm saying. Jack Dorsey is a wonderful, fantastic CEO, and Block will literally grow to encompass the entire global GDP.
You're doing it wrong. You're doing it wrong. He was so good that as a part-time CEO, he like far surpasses JP Morgan way back when.
Yes.
Yeah, he surpasses.
He's JP Morgan about
Diamond now. He surpasses Elon. He surpasses Zuck. He surpasses Bezos, Bill Gates, like all of them. Warren Buffett, trash underneath part-time. Jack Dorsey.
Yeah. No, it's
yeah. See, I can help feed the cult. Yeah.
Thank you. You are now the high priest of blockheads.
No, no, I'm not.
Nope. Yet it's not a position that can be rejected, because if you do, bad things will happen to you in life. Oh, by the way, if you're enjoying the stream, feel free to leave a like. By the way, it's just a thumbs up down right below the video. Okay, back to the discussion though. So, Jack Dorsey. I mean, this is a guy that also bought Tidal from Jay-Z just to be cool with Jay-Z. And I want to play it because it's been shared to me before, but the use of Cash App in rap videos is really funny. It's like a company that is the CEO is quoted as being almost proud. I don't know if he knew what he was referring to necessarily and what it implied, but he's basically saying, I'm proud that our company is being used to commit crimes. because in the rap songs, if you read the lyrics, you see what it's saying. They're using the Cash App. I think Juice WRLD's was like the most neutral in terms of, it wasn't like violent crime. A lot of the other ones were violent crime, saying that they're putting hits on people through Cash App. so I'm like, whoa, this is wild. You're saying, I mean, hey, no, sorry. Jack Dorsey is such an intelligent, wise person that he is displaying how important Cash App is to the culture. And so in doing so, he is showing how Cash App has both revolutionized and unified the people under a app that was meant to bank the underbanked. And so in a way, Jack Dorsey has brought liberty and security to our new empire. Sorry.
Jack Dorsey brought us avocado and chicken.
Look, you see, we already got Fuhat. Like, I can already, in my head, I'm picturing Fuhat screaming, block, block, block. I love Cash App. Okay. But in conclusion, with Tesla, him losing 55 billion or whatever it is, I don't really see it as a issue unless you're viewing it from the standpoint that Elon Musk might get upset here
Mhm.
and genuinely decide to not pay attention too much to Tesla's quote unquote interesting projects that I believe it's definitely priced for.
Good old Musk.
Yeah.
Good old Musk.
So I don't think you have Tesla as it currently stands with the attention it currently has without Elon Musk. You do need a CEO that sells the story. That is very important. And in fact, the Dean of Valuation says as such.
Yeah.
You can't, it's not just valuation, it's valuation plus stories. We were just having that conversation with Google. What is Google lacking right now?
Clear story. To
A
be
clear
specific.
story.
Yeah, but like that being said, though, and I'm not saying that to worship the man, but you look at Bezos, like at least his story was consistent and coherent.
Mhm.
Like yes, there was a pivot into AWS, but there was still like cohesion in that story. Whereas with Musk, I'm getting plot holes and schizophrenic, not to belittle anyone or degrade mental health, but like it's just all over the place, man.
Well, if I remember correctly, Elon Musk, is he diagnosed with Asperger's?
I don't know.
He's never been,
I mean,
I think no one's ever considered him to be just the average Joe. And I think
no,
that's what a lot of people like about him.
yeah. I mean, he will and has smoked dank weed on Rogan's pod. So
Yeah. Yeah.
you know,
And I mean, for the most part, it's not necessarily conspiracy. I mean, it's well known when you go through the legal process, you can push for certain judges. If you know who you're working with in that system, it's not a conspiracy per se. It's okay. If you're suing Elon Musk and you know of a judge, a corporate judge, who can
mhm.
preside over this case that has already presided over a case in which they ruled not in favor of Elon Musk. Well, a good lawyer is going to make sure that they get that judge to preside over the case as much as they can. They're going to request, they're going to push for it. I don't think it's conspiracy. It's just it's how the legal game is played. And of course, Elon Musk's team is going to push for that not to be the case. So, in the end, that judge was the one who presided over the case, and so you already have a disadvantage. Granted, yes, absolutely, that Elon Musk has, because he's a judge that has in prior rulings ruled against him. Not that I'm accusing the judge of bias, because that's a bit me jumping the gun, but I wouldn't put it past the possibility that there might be some, given that the person is a human being. So you can't eliminate bias as much as you want to or say you want to from the legal system. It's not.
Or is the conspiracy that Elon didn't want to make the payment? Food for thought.
Okay.
Just throw a
People
little
are so
curveball in
funny.
there. Yeah, yeah, no kidding. Mention Elon Musk and everybody loses their mind.
Oh
I mean,
yeah,
come on, like
he's a very divisive figure, and
I
a
mean,
lot
like
of people like to talk about him. Yeah.
we're talking what, like his net worth? Like the I know it's a tired expression from me, but like I'll still say it. Like you don't know a person's true net worth until they declare bankruptcy.
Yeah.
And for a lot of normal people, like good luck trying to order something and pay with your net worth as opposed to cash, like non-cash net worth.
Yeah. And just to be clear, I mean, recently a lot of that net worth, if you think about it, I think the private valuation on SpaceX was like 150 billion now. And I think he owns 20 or 40% of that. Between 20 and 40% of SpaceX.
Yeah.
So, yeah, in his net worth calculation, consider that. Like SpaceX is becoming more and more meaningful to the overall net worth.
Yep.
Tesla's there. Tesla was the huge jump, right? But then SpaceX came along. So don't ignore SpaceX. SpaceX has, of course, SpaceX, the main business, but also Starlink is in there. And then he has some other businesses also on the side, Neuralink, which I don't know what the private valuation is there. Again, that's just private valuation. His piggy bank definitely is Tesla. And Tesla's ability to really lower the cost of capital has frankly been a sort of a self-feeding loop-de-loop where Tesla's share price is quite elevated, trading at a premium, especially relative to any other auto manufacturer. And so they're able to access capital at a much more affordable rate. And you look at their balance sheets, the best in the industry. So there's a lot of things to like here as a car company, just looking at the business, not the valuation. And I got to say, I was looking at various reviews for the new Tesla Model 3 2024. They seem also quite positive in terms of improvement. And also, I don't know if I shared it with you. I think, well, I published it in the club, the review of comparing the BYD, what was it, the BYD Seal versus the Tesla Model 3 2024.
Oh, yeah.
Long story short, Spark Notes for everyone. The Tesla has some advantages in some things. For example, in drivability, it appears more quality, more stable in terms of the chassis. And the steering seems to be better. BYD has some other things going for it. In a 0 to 60, it comes out slightly ahead. And I think on the quarter mile, it comes out slightly ahead, but like little bit, like a tiny little bit. Not really noticeable, not something that would make you choose one over the other. And some of the other things, like depending on how you like your interior, more minimalistic with no buttons. Tesla's your jam. More buttons with like at least the drive stick. Well, you have that in the Seal, which kind of feels weird in an electric car, if I'm being honest. Tesla getting rid of the not the paddles, but the shifters in favor of the same thing that the Model S has now, where it's just on the screen. If you don't like that, then Tesla's not your jam, because now that's how they're moving forward. Tesla now instead on the sides has lights, it seems, so it's kind of interesting. I think that's a good feature. It's kind of copying. It reminds me of a Mercedes, where in Mercedes, some of the newer ones come with like the light strips from factory, all on the side and in the front. Something that Tesla, I have no idea. If you're a Tesla bull, you're watching this, and you somehow have someone's ear at Tesla, please grab them by the shirt, put them against the wall, and say,
Oh, no.
why do you not have a heads-up display?
Oh, no.
It is so simple. Everyone has a heads-up display. I don't know why Tesla doesn't have a heads-up display at this rate. Like, why? Why is there not one? Is it that difficult? There's aftermarket stuff for Tesla, so you can get a little dashboard, electronic dashboard that you can buy, but there's no reason why there shouldn't be at least a heads-up display so you can see your speed. There's no reason why that shouldn't be there, because right now the speed is right here on the left, and so you kind of have to look slightly, to the right. You kind of look slightly to the right, and it's not favorable. But left if you're in the UK, left if you're in the UK, right if you're in the US or everywhere else in the world. And so, I mean, it's not ideal, especially when you're driving, because you want to pay attention more to the road and try to not deviate too much. Of course, some people have really good peripheral vision when you're younger, like myself. I can kind of see what it is. But for older folks, sometimes that's not okay. I think just everything else, I'm not too much of a fan of the headlights. I think that's a unpopular opinion. I think the older headlights were better. The newer headlights are cheaper for Tesla to produce, so it's better from a business perspective. And some people, I think most people actually, like the aesthetics of the new one. I like the aesthetics more of the old one. And they got the wrap business going on there. If you get a wrap,
they're coming after your beloved burrito bowls, Fabio.
What do you mean?
First Tesla. First it's wraps, then it's burrito bowls.
I thought you meant they're dissing my burrito bowls.
They might be going for tacos first, so you still got some time, but yeah, Tesla burrito bowls, I'll give it a try.
What is this? So Tesla doesn't have a heads-up display because they don't want to give you anything in the interior, bare bones, and throw a tablet in there so they can make for as cheap as possible. Okay. Oh, I would say, okay, fine, do that, Elon, but please a heads-up display. That's it. That's all I ask. Something, just something, so I don't have to look anywhere else. Just something, just like a little hologram. Make it look super techy. I don't know. Just right there in front of you. That would be just, it would fix so much problems. So much problems.
It's good seeing day trading mindset. I'm expecting like in future live streams he'll be like bacon trolling counter.
I think I know who this is.
I know who it is. I'm
Yeah,
aware.
I'm
Yeah,
I'm
I adore them.
99% sure who it is in the club. No heads up display. You will look down and to the
You-
right
you
and
will
like.
look it.
Yeah, I guess I won't get what I want with that. And then yeah, you have Optimus, but none of that matters. But yeah, I've already ranted in the last live stream about Tesla electric car vehicles, so I won't do that any further.
Covered
So
a lot of
basically, I'll open it up to questions, and we'll close off the poll here. I think I've left it open the entire stream. So if you haven't answered the poll, that is on you. We shall say end poll now. Okay, so you guys are prepared for a market crash, 59%. 40% of you say no. Now, I don't know what no means. No means like you are 100% invested with no cash. But I think yes implies that, you know, you're like, yes, I want that market to come down. I want that market to come down. Give me that opportunity.
2 extremes. No in between.
Excuse me, sir. Heads up display enthusiast. All right. Heads up display enthusiast. Give me your take on the lack of heads up display, on Tesla capping on heads up displays.
Well, all I'll say about Tesla is that I have had relatives that have had Tesla since 2012, and I've always found them boring to be in anyways. They go for this like what's the word? And like it's just not for me. Minimalist design.
Wait, so but if you're a heads up display enthusiast and you have a strong neck, I see a
I
disconnect.
have a very strong neck. I don't know if you were looking at the comments, Fabio. Clearly, Bacon was.
I did.
What?
I threw something in the private chat, Fabio.
You have a strong neck. Where's this coming from?
It's okay. It's okay.
I have a big nose, and the neck has to support my nose.
Yeah. We'll tell you when you're older.
Okay.
So,
I am just a guy.
but yeah. So, anyways, that's my thoughts on heads up display and necks up display, I guess. But
I see what you did there.
Yeah, I was good. I like Slurpee's point, though. I don't know what prepared for a market crash means. Does that mean I have a bunch of
TPP toilet paper?
I thought he was writing some in his personal account.
What I roughly mean by it is if you're like, heck yes, I want this to happen, or
extremes.
oh my gosh, please no.
Yeah, 2 extremes, no in the middle.
Yeah. So. Anyways, now we're getting distracted. But
yeah.
So I guess we have Amazon and Meta. Was there anything else tomorrow that's interesting?
To me, I can't find anything more interesting than Meta and Amazon. There was another earnings report that we did go over as a community, and that is
Rockwell
Match Group.
Match, yeah, that's right. I do have something that's worth pointing out because
I think you're
like I wanted to throw it in macro, but New York Community Bancorp.
Yes.
I'm not saying that I know anything about banks or have value add. It is just one of those things that I will watch on the sidelines and try and learn a thing or two academically.
I find I have to go through the earnings call. I didn't look at the transcript. I just saw on FinTwit that some of the comments are getting spicy. Like some of the calls or some of the analyst questions were getting a little spicy.
For who? Sorry. for
Yeah.
NYCB, right?
Or,
Yeah, like one of the analysts
Yeah.
was like, "Do you want to give us guidance on this so your stock doesn't fall below $7?" I think that was literally how the question. Let me see if I. see if I can
Dang,
find-
that's a slap. Oh my gosh.
that is a slap.
Hold on, let me see if I can find it.
You want to give us guidance so your stock doesn't fall below $7? Oh my gosh. Oh, by the way,
okay,
so
this is.
for,
Oh, go ahead.
no, I was gonna put this up so people see.
Meanwhile, Fitch and Moody's be like, "Hold my beer. We're downgrading you."
So this stock, guys, this is a stock that I put 90% of my net worth in.
Shorting it.
No. I went long calls.
Oh, okay.
Expiring tomorrow.
So
I'm officially bankrupt.
this is what the call said. All right, I have the Andrew Walker. He's the guy from Yet Another Value podcast. It's a good
Yep.
follow. On Twitter.
Yay! Yeah.
He goes, so I put together everything you guys just said. Why not just give us what you think net interest income will be in 2024? So we're now guessing maybe your stock won't trade down to $7.
He was
That's
too
an analyst to management.
too modest.
Wow, but he follows up like, John, why don't you tell us what you might be wrong? Because you said basically we just took earnings assets, we applied a margin, we said, okay, this is where NII is, net interest income, fall it out with the other midpoints, and it's not sustainable. You're saying it's not that, but you call the dividend. You cut the dividend.
Well, they called
Maybe-
it. That's right too. But
Wait, let me bring the mic closer to the screen. Maybe you do your shareholders a favor and tell us what you think NII will be in 2024. He's getting aggressive.
I know.
You know better than we do because you know what was impacted fully in the quarter. There are certain actions you took which didn't fully impact the quarter. So why don't you just give us color?
I
Why
like.
don't you just give us the number and make life easy?
I like how the guy just says yes, absolutely. And I have to look because like this implies this is like the entire trend, the entire transaction. So if the guy just said yes, absolutely, and then he's like, your stock's at a 25-year low, I can't imagine you're happy with this.
Imagine if Google ever does tank and the management keeps doing what they do for earnings calls.
Alaka says he keeps going. Hold on. Does he have more?
I
Okay,
wouldn't
so-
be surprised. Like, come on, with an
me see if-
interaction like that.
Let me see
That's
if the
cool.
transcript's on ticker, if I can find this, and then see if he keeps saying, because like, dude, this analyst must have like had his like bonus writing on like how this call went or something. I don't, or maybe he's just a real one. I don't know. Okay, so it's up.
I mean,
Here, I
hey,
have it here.
He's with JP Morgan, yeah. This is just a case of big bank bully small bank. I'm joking, by the way.
Here, I have it up.
Okay, you have it. Do. There we go.
Your stock is at a 25-year low. I can't imagine you're happy with this. So unless you want, I don't know why you wouldn't take this opportunity to level set expectations. In fact, I wish it would tell me what minute this was.
Yes, so we could get voice clips.
Let me just eyeball it. So it's roughly quarter of the way down. So
Hello, and thank you for standing by.
Oh, you want to hear? Okay, I see.
Stephen Alexopoulos with JP Morgan.
There we
Go
go.
ahead.
What a name!
Here.
everybody.
audio good?
So
Yeah.
I'm gonna follow up on net interest income. So you guys gave us most of the components for the 2024 guide without net interest income. You'll probably notice your stock trading at $7 pre-market, which I think is a 20 or 25-year low. And it's because all of us are running the math on earning asset levels, applying the NIM guide, and you get earnings that are down like 40% if you do that. Is that what you guys are guiding to for 2024?
So the guide we gave, when you look at net interest margin, you see where the loans come down, and with deposits increasing, that is not exactly where, the totals we're seeing from down 40%. I'm not quite sure exactly how you came up with that number, but you got to look at some of the security builds as well. and the cash on the balance sheet. So when you put all that together, from a earnings perspective, that sounds much lower than what we would have anticipated that you'd be coming out with.
Stephen, Tom, I would also add to John's commentary that we are solving for Reg YY. It's significant. It's a substantial cash build in the billions of dollars. I think our guide has an additional $7.5 billion on top of 1231 numbers for 2024, and that's going to really impact until that we right-size our position on liquidity where we need to be as a Category 4 bank, have a negative impact on the margin in the short term. Over the long term, we hope to normalize our cash positions as we right-size our businesses and focus on relationship lending where deposit base comes from the relationship and looking at lines of businesses that are deposit rich, not deposit starved. That's the journey as we go into this Category 4 peer group, and clearly this is impacting 24 for sure.
Yeah, and there will be pressure, no doubt, as we transition from loans to lower yielding securities or cash. So yeah, that absolutely you'll see in that guide on the net interest margin. That's the transition that's going to happen in 24, and then we'll see that start to change as we can continue to grow the portfolio in 25 and beyond.
And I would also add, Stephen, is that clearly we haven't seen any activity in multifamily CRE, so it's been about a 90% reduction in activity in originations. There are no real property activities happening right now, so we have a relatively low coupon on the book and billions of dollars that have the possibility of moving either into a higher coupon and or off our balance sheet as we focus on relationship deposit lending. And that's clearly the focus as we focus our commercial bank efforts to focus on doing commercial lending, but more importantly, reallocating our resources to businesses and lines of businesses that have a unique return perspective as a commercial bank, full service commercial bank. So it's prudent to expect that a lot of these larger relationships that we have that are not depository relationships will end up gravitating off the balance sheet, probably to the government over time as rates reset themselves.
Okay.
And we have the ability to move on those low coupons off balance sheet as we right-size our position as a full-service commercial bank.
So if I put together everything you guys just said, why not just give us what you think net interest income will be in 2024, so we're not all guessing, and maybe your stock won't trade down to $7. Like, John, why don't you just tell us what you might be wrong, because you said basically we did. We just took earning assets, we applied your margin, and we said, okay, this is where NII is. Fall it out with the other midpoints, and it's down substantially. You're saying it's not that, but you just cut the dividend. Maybe you do your shareholders a favor and tell us what do you think NII will be in 2024. You know better than we do because you know what was impacted fully in the quarter. There's certain actions you took which didn't fully impact the quarter. So why not just give us the color? So why not just give us the number and make life easy?
Yeah, absolutely. When we looked at
your stock at a 25-year low, I can imagine you're happy with this. So unless you want, I don't know why you wouldn't take this opportunity to level set expectations.
That's insane. I don't know if I've ever seen that before.
We're very
I don't know if I've ever seen him just cut him off.
Does he cut back after this?
No, he just was like,
Just leaves it at,
Wow.
thanks for taking my questions.
Wow. That's
the guy's like trying to say something. He's like, dude, shut up. Let me finish my point.
this is why I'm a shareholder.
It's Fuhat. It's Fuhat. He's either joking or then again it is Fuhat. So who knows?
Interesting thing about this though, they bought one of the banks that went under in during March. So looks like maybe some of those assets were toxic. I don't really know exactly what happened, but
Yeah, because I want to say it was either Signature or First Republic that they bought some of, but it weirds me out though, because like if it was First Republic, like JP Morgan definitely got the lion's share of all the good stuff.
Yeah, no, they didn't buy First Republic's assets. They bought Signature Bank.
Yeah, oof, that's rough.
Yeah, First Republic was the gem that everyone wanted.
Yeah.
I have no idea why regulators again let JP Morgan of all the banks get them.
My guess is JP Morgan had the liquidity compared to everybody else.
I almost feel like there were other options.
If
you're like a regulator scared of consolidation, you just consolidated way more.
Yeah, no kidding.
if we see another sell off in banks and regionals, the move is to buy that one bank in Carolina. The one that always gets a bank every time there's like banks going under. It wasn't Pioneer Bank, was it?
Question mark.
Trying to think.
I mean, this might be like some company in this space might be an interesting speculative trade.
Oh, Fuhad is saying that's why he owns JP Morgan. I thought he was saying he owns
okay.
MSFT.
Okay. All right. That's fair.
So New York Community Bank was apparently one of that guy's top 24 picks. Sauron saying.
Thank you,
Oh,
Sauron.
that analyst.
Yep.
Oh, Ember Sauron coming in with that's a
Thumbs
really
in
good.
clutch.
That's a that's a good fun fact. Wow.
Explains why he's like
Really?
Yeah.
I've never heard, like his tone was like, "You idiots." Like that was the,
It's not personal. Oh wait, it is.
and the guy tries to say something, he just cuts him off. He's like, "Dude, I got my bonus writing on this."
Wow. One of his top picks for 2024. Oh my God. All right. Well, dividends cut. New
Yep.
reality.
Yep.
It's trading at bank crisis lows now.
Yep.
Are you buying?
This? No, I haven't even listened to the earnings call.
No, I'm not buying.
By the way,
We already did.
There's so much. I think there's just so much more interesting companies out there.
Yeah, I agree.
So,
But I will, like I said though,
like Crocs.
Oh God damn it! No, you're not doing this to me. But yeah, like I just.
Can I
think
just
that
say, interrupt
the-
Bacon real quick, just very rudely? Crocs is one of the best investment opportunities of this decade.
You keep
by the way,
talking like that, and the stock will trade below 7 a share.
by the way, the stock I was talking about was First Citizens Bank.
Oh,
They're the ones that got Silicon Valley, and they have a history of every time there's like a bank issue, they end up like getting a bank, basically. I mean, look at the performance through the past 5 years, especially for a bank. I think it's.
Wait, let's bring your page up. Is it okay if I bring your page up?
Yeah.
Okay.
Yeah, let me. So, I mean, and you can see that they bought Silicon Valley here.
Yep.
Yeah.
They have just a history of always, I think, like getting banks out when there's a banking issue. So that's what that was there. But
to those listening, by the way, Crocs was not my original idea. In full fairness and disclosure, but point is this one.
What's the market cap on First Citizens?
21 billion, 22 billion. But yeah, so if you see another banking crisis, they're probably a good shot. They run a really last time I checked, they run a really conservative book, and then basically whenever a bank crisis happens, they just buy up the degens and then move forward.
That is a patently false statement. I've been on record multiple times saying the otherwise. Yeah.
So another stock that I just found interesting, I haven't really put out a thesis or anything yet. Like not even planning to. I just find it. What?
Are you swiping?
Well, we'll talk about this one. This isn't the one I was going to talk about.
Oh, okay. Never mind.
We'll go ahead and talk about Match Group. So, Match Group reported, and what do you guys think?
I was wrong. Company in the bottom left there is a lot more interesting.
Yeah, and I was wrong. Like I for those that don't know behind the scenes, I thought with them having Hinge and Tinder, it would like cannibalize users, but instead,
this is blasphemy. This is blasphemy.
The market is wrong, is what you're saying.
This is more like it. I like this chart.
Okay.
All right, I'm going to keep this chart.
I just think like the investment thesis behind a dating app is kind of weird.
I agree. I'd much rather have the future of banking.
Yes, agreed.
Land and expand, Andrew. Winner.
Yeah, but like in theory, your goal is to get people off your app.
That is what we call the new network effect.
Andrew. That is not my goal. My goal is to get all the desperados,
Oh,
make them pay for
Mhm.
attention.
Mhm.
I see.
I just don't. Frankly, I see it. I don't like. I already have Meta,
Okay, that's fair.
and Meta is a different kind of network than Match Group,
I-
where I think like you have more permanence with your audience.
I don't. I think Meta and Match are very different.
No, they are, but like that's what I'm saying. They're so different. One is infinitely better than the other. The other one has a rotating door,
Mhm.
and the other one doesn't.
The other one has like three. Like as an example, you can never have 3 billion or 3.5 billion, whatever it is, daily active users on Tinder. There would be a lot of problems within a lot of households. like,
Mhm.
like if I got a Tinder, my wife would be like, "Wait, what's going on here?" I know it's just for market research. So I don't. It's just, to me, that's the problem with it, is that it fundamentally is an app that doesn't. It's got a cap on it. It's cheap, but I don't know. I've never been that interested in it.
Yeah.
At least it proved me wrong on something, so that's good. This is why I go passive with tech names, generally speaking.
That's no fun.
Yeah, I mean, at least I'm not shorting it like other people. Nor do
So-
I go too judgmental, generally.
Match Group on the surface is cheap, and it has interest from Elliott Asset Management,
Mhm.
which raises some eyebrows. What is Elliott Asset Management's performance or track record?
That's a good question. I don't know if I have a tracker on that. I know they helped us out with AGRD. That was very nice of them.
Oh yeah, I forgot about that.
And they were in NCR. They're in Goodyear Tire. Do they have like?
Looks like actually their 3-year annualized performance is 22.71%.
But well, does that include? Is that just public investments, or is that including their private investments?
Top
that's
20 holdings weighted.
Okay, I'm assuming that's mostly public. So okay.
Yeah, and let me look at top holdings. Triple Flag Precious Metals, Marathon, Pete Corp, Pinterest, NRG Energy, Suncor Energy, Peabody Energy, Seadrill. Oh, that's where a lot of performance came from.
Seadrill?
All right. No, Peabody. So they bought. It looks like they bought coal companies back when the world abandoned them.
Yeah.
Those returned like 600% from
Yeah.
the lows. Like that was a time I that was right in my face, and I was too afraid to buy them.
Same.
I'm not ashamed of admitting I was too afraid to buy them.
What's the whole case on coal?
No, Andrew, you don't know how cheap they were at one point. They were.
This is
they
like
were
10 gram style cheap.
No, they were like decimal multiple.
Wow.
Okay, like
Yeah.
something I have never seen before.
Mhm.
I've never seen that before, and so I didn't know how to react. I didn't know that. Oh my gosh, that's like that's like free money on the floor. That's what it was. Hindsight,
Mhm.
but
To be
it-
fair, like you would
Wow.
think like commodity specialists would have picked it up before then. So I get why you're hesitant.
yeah, no, it was you threw rock any of the coal companies, you're up like from the lows, 600%.
That's pretty nice.
And by the way, they argue it's still really undervalued. A lot of people who are involved in this space. I remember one of our club members, Ricky. He thinks they're really undervalued right now.
He's a pretty good investor too.
So that's 600% up and still being potentially undervalued. I don't know, but no. Just talking about back then, that was just again never seen that before. Multiples were just like on a forward basis, really tiny.
But if we're talking energy, why go with that when you could just go with Celsius or Monster?
I see. Put that in your car.
Monster Energy. Wow. What are they trading at? Because I actually want to get back into Monster.
55, 54.
Yeah, printing money.
55.
Here, I'll put up your screen when you bring it up.
Did you ever enter Monster, Fabio?
Come on, Bacon. It was literally part of the holding co.
I just want to say,
I forgot.
to all the members of the community, you're welcome for my value add with this. When I was pounding the table when it was around the 40s.
He's the reason why I bought Monster.
Were you pounding the table or were you pounding down cans?
Yes.
Yes. Okay. Both.
It was. It was. Yeah. I mean, like, I don't want to say like nothing's easy, but for Monster, I'm always like, when it drops to like a mid-high 20s PE on a forward estimate, unless there's something broken, it's like it's gonna pop back up.
Okay, Warren Buffett. This is your Coca-Cola.
Or Oxy. I don't.
No, drink
No,
company. It's a drink company.
Oh, okay.
It has to be Coca-Cola.
Yeah.
Andrew's gonna be 60. No, he's gonna be 90 years old, and then he's gonna be at like the annual meetings, and it's gonna be like old as heck on like the chair. He's like talking about how like no one could replace the brand Monster. It's an indestructible brand. You got to find and buy companies like this, youngins.
Yes.
I'm sorry, just like picturing you, Andrew, in the future, like all gray-haired with a wheelchair and like can of Monster right next to the microphones.
I just want to point out Zastar's comment, and I think this is a massive thing that could kill Celsius more than Monster.
Yeah, it's 300 milligrams.
That's what Monster is, or Rain is.
I thought it was like 200.
No, Rain's 300, but it's a bigger can. But
so it's more dispersed and not as constant. But either way.
But my thing is, Celsius brand is like health. Monster, like everyone, you're drinking a Monster, you're like, I know this thing's bad for me. I don't care.
I love
it's gonna kill me.
I love the tweet that I saw about like girls that drink Monster and what other girls think of them.
Yeah, but I was gonna also just say there's some decent earnings reports tomorrow morning.
Who?
Ferrari, Tractor Supply.
Ooh, that one.
Enterprise.
I'm not going to hear the end of it with Dan tomorrow. Oh my God! If Tractor Supply goes up and Meta and Amazon goes down, he's going to be like,
no.
I'm just going to slide this in here.
But if it goes down and Google's up tomorrow, I get to clap back for his comments with me today. But Honeywell,
yep.
Peloton, that'd be fun. Enterprise Product Partners.
Yep.
That was Did you hold that at one point?
I thought about it. No. No, I did. I did own it at one point, but I wasn't in it for long.
Markel is. I think they already reported their numbers, but they're doing their call tomorrow.
Bobby, are you too hesitant to do the super thing?
Huh?
You got a payment.
Oh, I didn't see it.
Yeah, super thing, but
Sam,
I can see why you'd be hesitant.
Oh Lord,
Sam, I think that's too much. It'll be here briefly. Just to honor the social contract.
Yes,
I have
social contract that was imposed upon you.
All right, sorry.
Yep.
Wait, is that Oak Tree? Is that like the?
Yep, because it's still part of it's public.
Okay, because I thought it was fully owned by Brookfield, but Cardinal Health, Peloton is gonna be a lot of fun.
Thanks a ton.
I'm more interested. Damn, I'm just interested in Ferrari, honestly, of these, and Tractor Supply.
No interest in Merck?
No.
Okay.
Really?
Merck?
I mean, like from like physical goods perspective.
I'm more just interested to see what they talk about because Merck's the shipping company, right?
Yeah.
Red Sea. I'm just kind of interested to see like their opinions on all that and ITW, if that's.
Yeah, because anecdotally, I recall a lot of shipping companies, like the oceanic shipping companies, had their contracts like getting figured out right around that time frame of things popping off over there. So they probably were able to get some money out of that. To say
I
the
don't
least.
get. I don't know how Earnings Whispers organizes this. How is ITW way over here when it's like the biggest market cap company on this list?
Oh, they do it by popularity.
Yeah.
Oh, okay. Because
Yeah,
like
this is
I
like
follow
one of
ITW.
the
I'm like,
retail things. Boom.
okay. Because I'm like, I saw ITW and I was like, oh shoot, like why isn't that like here? Train Technologies, isn't it some you like bacon?
It was something that was on my radar, but I'm not. I can't recall off the top of my head right now. Like it might have been while I was researching. Let me double check.
Why did KRC go down so much today?
Yeah.
Did
Rates
prices go down?
remaining high. No, that's I can tell you why REITs reacted the way they did. Rates remaining high.
I forgot if it was a
Did
Dan
they?
pick, but
I
I
thought-
remember that.
No, go ahead.
Oh, I was just gonna say with Train, I believe it was on my radar from looking into HVAC companies. It might have been a Dan pick in the past. I'm not sure. Don't quote me on that.
So didn't the Fed come out and say what they said and rates reacted by going down?
The 10-year.
The 2-year went up?
Sorry?
Did the 2-year go up?
I didn't see that one.
Okay.
Yeah.
So anyways. I don't know. I think there's a lot, tomorrow morning. I'm sure after the close, other than Amazon and Meta, there's gonna be stuff too.
Here, I'm pulling it up. No, on the 1 day. Let me pull this up. It looks like it
How did a line do?
it went
Up
down.
a lot. A
Oh,
line?
a line. Okay, we're talking about different things. I was like, what do you mean? I'm looking at this chart. Yeah, the 2-year went down.
So what went up after? Why were shorter, like real short-term rates went up, or?
Yeah, so the 2-year went down in rate. The 10-year, let me pull up the 10-year.
I know 10-year went down.
Yeah, pretty much the bond market saying, yeah, call your bluff.
I think the bond market's extremely aggressive. Like, and I said this before, pricing in 6 cuts was like.
I
Well,
forgot
the thing is, the bond market doubled down. That's not.
Are they seeing, like, part of me is like, is there something they're seeing?
This is the commentary I'll provide on this. What it's telling me, for what it's worth, it seems like financial institutions are seeing something that we as participants are not really seeing because we're not privy to the information that they have.
Right.
They are behaving in a manner that is something is worrying them. And so they're buying up risk-free assets at unconceivable amounts. And every auction that seemingly comes up as it's growing, the let's call it the theorists like Peter Schiff are saying eventually there's not going to be any appetite. No one's going to lend to a defaulted government or a bankrupt government. And they are just selling out completely. It's constantly being met. Demand is constantly being met by institutions. So they seemingly can't get enough of these risk-free instruments.
Yeah. Interesting. They're like Dave Chappelle. You got any more of those treasuries?
Yeah, no, precisely. So they're behaving in a way that's a bit cautious, and I don't know if that means that we need to be cautious.
Yeah, it's a very interesting, because like I see the Fed come out and like to me it's like, well, they have now they're going to cut, they have less meetings to do it. So by default, you'd say, I mean, obviously they could do 50 basis, they could do a whole, they could do all 500 basis points in one meeting.
Mm-hmm.
But in theory, like they're going to come out and kind of be methodical. And
thanks, Dex.
I don't know. It's just that reaction was really weird to me today because, like, I know that it was like a 60% chance. I think.
Wait, Caleb, you're a bull. What flipped you?
What
flipped you?
The power of crayons. I got your back, Caleb. See,
No,
unlike
I wanna know
Fabio,
what you saw on his Bloomberg
I
terminal.
I am not going to like behold him to anything.
Anything?
Yeah,
What did this man see today?
yeah. I just hope that Caleb pings me from time to time.
I'm a permanent. We'll just saying the bond market. Oh, he's saying the bond market. He's saying a bit cautious in the bond market's an understatement.
Yep.
Oh, okay. I was like, I thought you were saying you were getting cautious. I was like, whoa, that is 180.
Power of crayons.
But to be honest, being a perma bull does pay better than being a perma bear. Well, no,
Long
not in
term,
terms
long
of
term,
getting
long
attention and
term.
content.
Yeah.
Attention and content,
Mhm.
perma bear, 10 times more. Oh my god. So you write books about it, do everything you want.
Unless you short in a dumb way.
I'm taking my hat off. This moment of silence for Paul Gabriel, dumbest rich person I know. So,
yeah,
Which-
he's up there for sure, right?
yeah, I think his total estimated loss right now is on the low end like 9 million, on the high end like 40 million.
So, what do you think is worse, like him or someone who just gets a gambling addiction, blows it all in Vegas?
Him.
Like that one guy that like sold his company for 700 million and blew it all.
What?
Oh.
You know?
No, I don't know the story, and that's horrifying.
I guess it depends on how much more you view an entire company's worth of people to a family worth of people. Yeah.
Yeah, because it's not even his own money. He's
No, not just
destroying.
Yeah.
Well, presumably, maybe his own money's gone now.
Yeah, because he did say that they were in the process of like letting him do his own thing in that account or separate account or something.
Can you imagine? Oh my gosh.
Yep.
Oh my gosh.
Yep. That's
So-
why value long only funds.
I'm sorry. It wasn't. It was 130 million. No. Wait. No. He was
That's
very
still bad. Yeah, that's still
Wait,
really
he sold his parents' company?
Yeah. Here,
Wait,
so,
how
like,
did he sell his parents' company?
So he inherited. He became the CEO. He was actually really good at running it, like super good. And then he was like, "Okay, I've been doing this like here. I can share it now."
He's like, my company has the same market cap as this casino.
What a degenerate.
Yeah, he became president part owner. Apparently, though, like I read a longer thing on this, and he was really successful running this company.
Wait, Andrew, can you zoom in?
Yeah.
Bigify.
Known for being a high roller in Las Vegas.
For a while.
Yes.
Cocaine and made sexual advances towards employees. Oh God, cringe.
Such a great person, quote unquote, great.
This is sad. Like this guy had 100 million, and he had to get a GoFundMe to raise 100,000.
Oof.
No, he deserves it though.
It's still sad.
Yeah.
That, like that happened to someone. He's estimated loss approximately 204 million.
Back in early 2000s? Question mark.
Yeah.
Yeah. 07. Yeah, 07. That's
Dude,
fun.
He could have been a billionaire.
Just need 8% a year for.
Could have been a billionaire.
But so yeah. Anyways, my point is, I don't know if that's dumber. Or we're saying Paul, because this might just be like, well, he has a gambling addiction.
Yeah. That's pretty dumb. His is pretty dumb. His might win. Paul is not that dumb.
Right.
Paul's dumb, but like that's like the new standard.
Yeah, because you're like dumbest rich person. I was like, this guy I think takes the cake for you. Like I read like there's a I don't know where I saw a much like longer story on it. And like it was just like going into detail about his like his nights and like everything out there, and like everyone knew him there, and they just be like, oh yeah, it's Terrence. And then at one point, like they'd be like, "Oh yeah, you owe us money." He's like, "I'll get it to you." Like you owe us $2 million. He's like, "Oh, no problem, I'll get that to you." And one day they're like, "Oh, you owe us $2 million," and he's like, "Oh, I'll get it to you." I'm like,
He
hey,
won the lawsuit against the casino.
Apparently, maybe I don't know. Maybe it was on appeal. don't
because I think they let him gamble like completely intoxicated.
Oh, okay.
But I don't know how much he actually won. I think it was something pathetic. Well, pathetic compared to what he lost. I think it was a decent sum of money, but nothing like 200 million.
Man, wow. Gambling companies also have customers who eventually stop being customers because they all become homeless. Yeah, I've seen some of the videos on YouTube. Have you seen them? They're pretty sad videos. People like lost everything that night and they're like crying in the hallway.
Jesus.
Yeah. It's like lost porn that people watch for like, remember a GameStop era?
Oh yeah.
Yeah. But that's like the original version of that.
Yeah.
So, anyways, with that being said, I think we've covered all the topics. If there's any questions left in the chat, feel free to ask them now. You have within 2 minutes for us to kind of close off. There's no questions. Tesla, easy. Sorry, not Tesla, NVIDIA. Okay, I don't think we're going to get any questions, which is good. So we've answered all the questions that we've had, and it's late. We wore them out. Yeah, it's always good when the hosts outlast them. Thoughts on KRC at these prices? I'm probably going to be reinvesting dividends soon, but not adding new capital.
Dividend.
Yeah. That's what, because the last update I gave you, selectively. Oh, I like that phrase. Get jacked cult members.
Yeah, there you go.
That.
Yeah, that's clever. Swaggity pig fig.
Yeah, I'm not adding net new capital. Thoughts on my PE? Sorry, thoughts on PE and my video.
His video. Yeah, the reaction video to. Have you actually read a effing finance book?
We'll react to it on another day, not on the public stream. Aritzia. So I'm terrible at giving you opinions on this stuff because I usually need to just like ask a female and be like, "Hey, yo,
Oh yeah,
what's up with this?"
What is Aritzia?
Aritzia is a Canadian apparel company that's blowing up recently. Let me kind of go show you their website. They just sell clothes. It's fashion.
Mm-hmm.
Shut the Canadian site. I want to see what's different.
What type of fashion, if I may ask? Like,
Look. Oh, it's a little bit more on the expensive side.
Okay.
I personally wouldn't wear any of this, right? For obvious reasons. But I think they have a men's. They have men's. It's just not. Is there? No, I don't know if there's men's. Never mind.
They make it for men's.
They make it for men's. No, I don't think they have men's. But yeah, they have all that you see here, all the categories. So activewear, this is what I'm thinking competes, with like Lululemon. I'm trying to see, like
Wait,
basic.
They have a boyfriend zone in the store?
Wait, what?
Where you see this? Saying?
That is clever. You know what? Shout out to them.
Okay, this is what you learn in your marketing class, where you don't need to even market towards men. You just have to market towards women, and you'll still get men's money.
Yeah. Yep. And in that case, they'll actually be pack meals too, on average.
Yep.
Yep.
Where's the boyfriend section?
Is there a better KPI than my go-to of inventory turnover when it comes to a company like this? I mean, then again, I don't know if they franchise model, so that might be an awful dumb statement.
No, they don't.
Made. Okay. Yeah, because I happen to like inventory turnover.
Oh, they do.
Okay. Yeah, then never mind.
No. They have a boyfriend section.
Wait, what? I hate you.
Well, that makes me bullish on them. It's a buy.
This is the boyfriend section, apparently.
Wait, really?
Yeah.
Okay.
Clothing, sweatshirts, boyfriend.
That's interesting. That their choice of model for Okay.
Thoughts on Sentinel One? Don't like them.
Ouch.
The
Very sad.
next CrowdStrike is CrowdStrike.
It's an inferior product to CrowdStrike.
Oh yeah, Walmart stonk split.
Dude,
What happened?
Sam just sent me like the perfect reaction video. I'll show it to you after.
Oh, very nice.
So Walmart split.
Yep.
That's a non-event.
Should be a non-event, but
Should be a non-event.
yeah, it could in
Bullish.
theory, but I'm not. Yeah, I'm not gonna.
Some people are gonna go, wow, it's getting cheaper.
For what?
Walmart is cheaper now.
Oh,
Okay, fine. I will shout out Hibbit.
Hibida.
I don't know. I'm not a fan of these kinds of companies.
Really? I
No.
thought you were at least like politely interested.
No. It's because I'm not good at understanding when to go in, when to go out. I don't
Oh,
understand
okay.
the
That's fair.
changes in trends for stores,
That's
especially
fair.
retail. Like Aritzia, I wouldn't get involved with Aritzia. Hibbit, I wouldn't get involved with Hibbit. There are exceptions that almost pass the line where I would invest in them, and that's like Lululemon. But even that, with that one, I'm just like, I don't know if you'll actually still be around later. High fashion in terms of luxury, absolutely. Like Hermes, LVMH, I'd buy those, but I would not. I don't know. Hibbit, Abercrombie and Fitch, American Eagle, all those, Victoria's Secret, none of those.
Fairness to Caleb and his love of Hibbit. The counter would be, but then why Crocs?
But then why Crocs? Well, Crocs owns its own brand.
this one isn't a glorified Foot Locker.
My counter would be to myself would be
Like Lulu owns its own brand, so I want to actually be clear. That's one benefit to Lulu, but Crocs is so ugly that if it's done well and it has a success, nothing can kill it.
No, your real answer is because I get to troll bacon with Crocs. And
That's an added benefit. That is an added benefit that I can troll bacon.
That's a dividend.
I can say, hey, Bacon, how is our company doing today? Give me the report by the end of the week. I want to know how it's doing today. And he'll just say that. He'll just be like, I hate this. And it just brings me pleasure, brings me joy to know that we're both shareholders of this wonderful company. Andrew, you should be a shareholder too. You should buy a share of Crocs. Yeah, buy a share of Crocs.
Out of principle, I refuse.
This is why I offered you riches and you slapped my hand. I offered it to you.
Yeah, but those riches come at a cost, one that I'm not willing to give up. I value myself more than just riches, Fabio.
May I tempt you with the entire world, aka Crocs.
It comes at the cost of my soul buying Crocs.
I got the reference.
Yes.
We're religious.
Religious lore.
Yes.
Andrew's in the middle of the desert. He needs water.
I'm surprised.
You're out of nowhere. And I'm like, here, I can offer you.
I can offer you a quag. Look at the margins.
No. It's like off in the distance. They're just like an oasis, but it's not filled with water. It's just Crocs. It's like clogs. Oh my gosh. All right. Anyways, with that being said, thanks you guys so much for watching. If you enjoyed this stream, feel free again to leave a like. If you're not subscribed, go ahead and subscribe, and you'll stay tuned for next time we do live streams, which I'm trying to do them weekly. And so we'll probably see each other again next week. And when I get to it, when I have the time, when time permits me, I can do videos, which those are now fewer and far between because live streams are probably the most flexible for me to get out here and have discussion with you. And hey, it's 2 hours and 30 minutes of content. I'll try to get timestamps in for this video as we close off here because I roughly know. I've been actually trying to keep track of when we talk about things. So, but that's going to be for people who haven't watched the full thing. You came in late. just refresh it in about an hour or so, and there'll be timestamps, or watch it tomorrow for the parts that you might have been interested in but didn't, join in on time. But yep, thank you guys so much for watching, and we'll be seeing you on the next one. I'll do the outro.
We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.